Night, everybody. Welcome to this week's BrickTalk. I'm Randy, and as usual, I start off every episode by reminding everybody that you shouldn't buy or sell anything that we talk about on our podcast, right? You should buy and sell only with the actual personalized advice from an investment advisor. While you hear us talking on the show, including Danhai, who is an investment advisor, you shouldn't take anything said on the show by him, me, or anybody else as investment advice, right? So that every week, and it is true every single week. So, with that said, welcome to this week's Brick Talk. We're touching a nice topical point, a good IPO. So what's up, Danai? Still hearing me fine?
What's up, bro? Yep.
Perfect. And I'm assuming everybody else can also hear both of us. How the week so far? How's the week been?
All right week. Not much trading. Okay, I was very active this week. But yeah, good week. Good week.
Hell of a week. Same for me. I mean, I haven't been watching the market. But of course, as we know, you don't have to be watching the market. That's not how you make money on the market.
The market happens regardless.
Exactly.
It's nothing though. What you call it? The market object for permanent. If they stop looking, stop keep.
Exactly.
The looking isn't what causes anything to happen.
Yeah, or putting it another way, the stocks don't know that you own them or want to own them. Yeah. So it's our topic this week. We don't have any Shay this week. You guys looking out for Shay. Shay's with us this week. So skipping this week, but we still have a great topic, something in mind, and something I think that's obviously topical. IPOs. We had the topic, and of course there is an IPO this evening. Well, it didn't drop this evening. You know, I've been looking at it like that. It dropped. When did it come out? Yesterday?
Last night. Last night before.
Yeah, the days run together. But yeah, it's from Qantas, and of course, we're not talking just about that. In fact, the point is not to talk just about Qantas, although I'm sure. Well, it might come up, it might not. Who knows? But just IPOs in general is something that I've been hearing more of as every time an IPO conversation comes up. And for this specific IPO, of course, as it came out, we have people react to it, the growth subscribers in the group are reacting to it. And it's always good to keep your finger on the pulse of what's happening. So yeah, it has had I think a completely different effect on the retail investor, the people I've heard from anyway, than maybe it's 5 years ago. 5 years ago put us to 2021. Wow. Or it's 2020, of course, people always about 2019, 2018, and previous, the earlier days of the junior market, although that'd be like still the first 10 years of the junior market. But just, the people talking about IPOs and how they're not the same anymore. And it's a point I have considered a couple of times. And I asked people, and I'm sure I asked people tonight, but I asked people around it, and it made me get to that title that we have, which a good IPO. So, what is a good IPO? But yeah, what do you think? Then I just going right off the bat straight into it. What's the feel that you've heard from people around IPOs so far this year at least?
Oh no, they don't like it at all, bro. Vex. Why we can't see money in this thing at double? Why not triple? Why we can't get a free double? And even like the thing there, because Decade was last year, you say?
That's a good question. I'll tell you in a second. I'll check my money GA and see.
But I know the same feeling rolls over into this year. They basically feel like they miss out because they never come to market. But I guess that was the expectation of a triple double IPO. But yeah, the vexness is real. We get something and it not really do what we want it to.
Late last year, November.
Late last year.
Yeah. Is when Decade dropped. Yeah.
Yeah. So Decade and then Woodcats.
And then Woodcats. So Woodcats.
Yeah, so that I've heard so far is upset with Woodcats. Because they never do no trip. So as far as we don't get a good IPO as far as those concerned.
No good IPO, which is, I mean, yeah. So I hear the same thing all the time too. Nothing too good. And I'm always trying to put a larger view on the market, a larger spin. Because the market is everything. It's more than just it, right? So we have had equity IPOs. We've had, if you count in this one,
Oh yeah,
Qantas.
so that's the next thing. Nobody talks about the funds like they're IPOing.
Exactly. Right. So if we're talking Qantas is the second equity listing, equity offer. 'Cause it hasn't listed yet. It's the second equity offer on the market this year, behind Woodcats, as he pointed out. And how long? You remember how long when Woodcats was?
How long ago?
Like
Or how
when
long it was?
it came out in February, I guess, and listed in March,
I
or
believe
did
so.
it come out in
Yeah,
January?
I think that's how it worked.
January, actually, late
January?
January. Yeah, January 26th is
Oh,
when the prospectus came out.
ooh.
Yeah, we got my money, JA, for keeping us accurate. So yeah, January is when Woodcats, January 26th to be precise, is when the prospectus came out. And we have seen since then it listed March 17th, so the middle of March. And so we're, wow, about exactly 1 month. Exactly 1 month since it listed. And it is below IPO price. It listed at 90 cents. It's today closed at 83 cents. Anybody talk to you about that specifically?
I go again in the triple bit.
Oh, sorry, I was asking if anybody asked you about that specifically.
What specifically?
Woodcats. Sorry, I was saying so. Woodcats listed exactly 1 month. So today is exactly 1 month since Woodcats IPO'd, and
So yeah,
90
if
cents.
they ask me about the month anniversary or what?
No, not the month anniversary. Just in case, just like I didn't realize that it was 1 month until just now, and I
Me
looked it
neither.
up.
Me neither. Till you say.
Yeah, but looking at it, yeah, month anniversary, if you will, 1 month after the fact, it is below IPO price. I was wondering if anybody has spoken to you about that. Not just it
About
being
Woodcats.
yeah, about Woodcat specifically, yeah,
I mean, typically what they're talking about is the view at IPO price.
below IPO price. Yeah, the disappointment from
Disappointment. So some
yeah,
of them is also hope, opportunity, to be honest.
you get a lot of people saying that.
Not I will say a lot, sir.
Yeah,
And
yeah.
truly, it's mostly like grow people who looking and saying, okay, I act. So the thing we know is how often we hear long term thrown out by most people. How often we hear dividends thrown out by most people. And then when we have a conversation around these things, an IPO is framed as good only on the basis of it doing well doing tripling, doubling within the first week.
Yeah, all right,
Say
yeah.
long term until your time to invest.
Uh-huh.
You want an IPO and then no IPOs in the water, the market not good. If you can't find a short-term opportunity that's right in front of your face, that's people, right? So as much as we hear long-term and all those nice things, that don't really come around for most people. So I hear people that say long-term tell me, boy, the IPO them and them costs for the IPO them. But I'm looking at them because we were like 2 minutes ago, we are having a long-term conversation. So that's reality. Right? So again, so the people that are saying that picking a look at like an opportunity. The truth is, I can't think of anybody that's not in grower and them thing that they're closer to that to a real conversation around what they actually want for their money. So I think that is a real difference factor there. And you kind of see things with from my Atlantic, it was a good example in people's face of, hey, I mean, Fesco was, in my opinion, but it's not spoken about like that because we know a long time so people have went in reverse memory Fesco. It double before it double. It was down before it was down while it was up to most people. It was when it doubled, it never doubled yet for most people. So in Fesco was a good opportunity. We came online speaking about buying Fesco for a good while when it was boring.
True. Fesco, and that's a little not a little, quite a bit ago.
Yeah, well, I thought it was
Fesco's
a
listing
while.
was 2021.
Mm-hmm.
Yeah, so Fesco's listing was 2021. And funny enough, I always pointed out that people speak about the rise in Fesco in mid 2021
Mm-hmm.
as the no, sorry, actually, people speak about the rise in Fesco in 2022 uh,
2022. Yeah.
as Fesco's IPO.
Yes.
Yeah, the Ukraine, the Russia Ukraine conflict. That's when people speak about. Even though just when people talk in, oh yeah, when Fesco did IPO and Russia and Ukraine the war that happened and gas did fly and you just in there always pointing out that that's not when it IPO. That's like a year
Mm-hmm.
after it actually
A
listed.
year after.
Yeah, well, that's when people think about it. But it leads
It
me
was
to
good money for a long time, but people never see it as that.
exactly. Yeah, and yeah, yeah, it hit some highs that
Mm-hmm.
people obviously saw and loved back then. Um, but here it is years later, 2021 till today. So we're looking now at what 2021 till now 2026. Um,
Mm-hmm.
a nice 5 years on top of things, and I don't know IPO price of 80 cents.
80 or 90. 80, 80, yeah, 80 cents.
80,
92
80
for
man.
that's right.
I remember that
Yeah.
one because it was we really we've spoken about it a long
Mm-hmm.
time over the
What,
years.
what what confused me just now was Woodcats, what it was 90 or 80. So I was saying, which one was 90 or 80? Which one was it? But yeah, Cisco was 80.
Yeah. And that 80 cents was a big deal at the time. Nobody had
Mm-hmm.
in to my knowledge had done a listing that cheaply.
Mm-hmm.
Um cheaply, nominally cheaply. Nominally meaning the dollar figure.
I mean, big up Mayberry and 50 cents. What name? Wigton.
Wigton, which was also a big deal, a smart move.
Mm-hmm. Mm-hmm.
A smart move years later,
Mm-hmm.
a few years after. Well, actually, no. So Wigton was 2019, and it was a 50 cent listing. But
Mm-hmm.
I guess my own bias is showing there. Wigton, the conversation around Wigton was more, government and you would note and blah blah blah. So I didn't even think about that. But you're right. Yeah, big up Mayberry for that. Because that was a factor in the pricing.
Mm-hmm.
It almost makes me want to go off on a well, I can go off on a tangent. What do you think about looking back? No, because they could have done Wigton at $1, half the
Mm-hmm.
share count. What do you think?
But them know. Them know the money. Yeah, yeah, they definitely could.
Years later, 6, 7 years later,
Mm-hmm.
you in hindsight, what do you think? Great move, or would you have done it at $1? You think doing it
No,
at
I
a
think
dollar
50
would have?
Cent was great. I think 50 cents was great. Especially because I think the $1 doing it justice now. 50 cents I think 50 cents to
Uh huh.
$1 does great justice because $1 hitting $1 is a good nominal level to look at and feel like, below that it's something there. Keeping it at $1 is easy in a way. Okay, it's good with psychology.
Mm-hmm.
People will buy around that. People will be okay with moving around the $1.
Mm-hmm.
And you see at $1 you're double where you started. So you're having
Easy
that level of
100%.
maintenance at that level,
Yeah.
and you're maintaining at a level where you're double, you're 100% in profit. So I think the 50 cents good move.
Yeah, it's a hell of a move. And I think about it. Um, you mentioned the psychology point there, which is a factor that must be considered. Well, not must, but in my view,
Yeah. Mm-hmm. Are the
worth
$1
considering.
IPOs working out? No, the ones that not necessarily like think of $1 IPOs that are below the $1 right now.
So that's a good one. I mean, I don't want to say maybe most. Not most.
Look at the recent ones, yeah.
Yeah, a lot of the recently, you're going back a couple of years. I
Look at
have
the
a
post-COVID ones are.
Yeah, actually, I have a watch list. I'll find it, I'll share it because I can share it. I have a watch list on my money J of them. I don't know if I haven't updated it, I know, but I did have some of the, let's see, IPOs. Oh, the since COVID IPO list.
Yeah.
uh,
I was hesitating to say most because I was thinking about maybe the ones before COVID might be fine, but I have to check what they actually listed at.
yeah, but I mean, looking at these, just looking at and it's across all markets. Obviously, it doesn't have anything I should add to it. I think what we've had since then. It's not like we've had that many. We've had woodcats and any that that come to mind. You can remind me about. But last few years, yeah, just looking at the current price right now. Learn 27 cents. Eddie Focal has 27 cents. That's Jesus. What is that in terms of a fall off?
Heavy.
Yeah, too heavy.
Like a whole was 70,
73%. Yeah,
yeah.
73% drop in value. 1 GS 35 cents. So it's 60 something. Yeah, 60 something. 65 flat. JFP 45 cents. You know, yeah, that's a 65% fall in value. And what I'm thinking about here is that thing that I always remind people about, like what it takes to get back to square one. Like, don't make the mistake of thinking that it's don't make the mistake of thinking that it's like it's not six. Like JFP is currently at 45 cents, right? Don't make the mistake of thinking then that it's down 55%, but don't make the mistake of thinking that it's 55% to get back to where it was. That's not quite how it works. Yeah, it is painful. It is much more painful than that. To get back just to square one, it requires a profit. It requires a amortization of a profit of
Almost double.
not almost, more than double.
More than double, yeah. Almost,
yeah. It needs, just talking profit alone, 122% rise. Well, in terms of rise in the price, it needs a 222% rise in the price just to get back to IPO price. And that's the one at 45 cents. If you go back through the ones that we mentioned there, it gets even more painful. Learn at 27 cents. That requires 370% up in the price. 1GS at 34 cents. That requires 294% increase just to get back to square one. IPCL, very interesting one, at 82 cents, but it didn't IPO at $1, right? Which interesting because of that point you mentioned about the psychology, where the psychology over the years, the $1 IPO kind of got hammered into people's brains. And 1GS was interesting because they came to market at an IPO price of $2. At the time, I wasn't, not, what did I say, 1GS? IPCL, not 1GS, sorry. IPCL came to market at a price of $2, and they're now at 82 cents. So they need 243%, like the price needs to rise 243% before you get back just to square one. But on the psychology point, I don't know why they did that. I thought it was a pretty decent offer. Maybe could have been priced better, but I thought it was a pretty decent offer. But them choosing the $2 price, I always say that to this day, I think that it's almost like they did it just to be different. I don't know.
Yeah. I mean, the reason given was hilarious, bro.
What was the reason that they gave?
We don't want to list at a lower. I think it was they don't want to list lower than their competitor elite.
Oh,
Because that's a price and a listing.
That did not work out. Well, market ca- market carried it down, down to yeah. Oh, it's
It's
fine
a
this level.
compare elite then. It's the one.
Yeah.
It's not a measuring stick.
Oh my god. And hey, and to Elite's credit, Elite is nowhere near that. Is Elite? I don't know. Let's see. Today, Elite is at a closing price of $1.37. What did Elite IPO at?
Was it $1 or $2?
I don't think they're a $1 IPO. I think
I
they're
don't
at
think it was a
like
$1. I don't think it was a $1. I think it was a $2.
$2.
Maybe
It was
$2
they were
something.
a $2 IPO. Okay, so they're really trying to match Elite. Well, well, maybe that's that's a good half segue into that point, into the question I have then. So I asked this question, I asked it in the Grow group, and I'll ask it publicly. To anybody who wants to come on and answer, you can send a speaking request on Twitter, and we'd love to hear from you. So send a speaking request. I'd love to hear, what do you guys consider to be a good IPO? Like, what do you need for an IPO to be good? Uh, yeah, what do you need for an IPO to be good? I haven't done any giveaways for a while, so I'll give away like a my money jaded discount to anybody who a premium discount to anybody who comes on, sends a speaking request and talks to us. But yeah, what do you guys think is needed for an IPO to be good? Or what do you think a good IPO is? Because that's a major problem that I think a lot of people have. One of the biggest things, I think nobody really has that idea of what a good IPO is. Let them say it, well,
especially, especially looking forward. It's. I think it. I want buck-ups into it. I don't want. It's. You don't really want to set. You don't want to set the table. You don't want to list out what you want to see before. You want to see. You want what they have in mind largely is. I'm there. I make some money, and I can't really spot why, which is why you often see it. It's
mhm,
Randy for buy the IPO.
yeah,
That's really it. They want you to tell them, say, yeah, man, this is gonna by the time you're gonna do whatever you need to do, and you're good. I
yeah,
can't really pinpoint what it need to look like for the things I want to happen. Because in a lot of cases, neither of those things are penned out. I don't really know what more happen, I don't know how it happen. I don't know what it looks like. I just want to make some good money. Double, triple, and go. And even then,
yeah.
it's a go double, it's a go triple. You can quadruple. You're not really sure what to go. You want
What,
somebody else
what,
tell you that.
yeah. S- the funny thing is there. So I think even in that, people know what they want, but they, I don't know if it's that they don't want to say it, and if we don't want to say it, or we want to say it, but we
No,
don't want.
maybe I mean, somewhere in there's a mix of hopefulness too, which is why them ask when you will sell. Because I mean, I want to double, but suppose Randy tell me I'm gonna sell that triple. Me, I gonna sell that triple to now too, because I got triple.
Word. Or maybe them see the other way. Maybe it's when you're going to sell, you sell at triple, so I'll sell before triple because when you
Before
sell it
you,
at,
so
yeah, yeah,
so
yeah. Right?
me make sure me good.
Yeah, I think a lot of that. I think there might be maybe not a lot of that, but some of that too. But yeah, join it. Send a speaker request. Would love to hear from you. Let's hear what you guys think are the elements of quote unquote a good IPO are. No, I mean along the time I'll say some of the pieces like well I'll ask you Danhai, what are or give me one thing that you think is needed because I think there are multiple elements that are needed for an IPO to be good. But
Mhm.
what was one of the elements that you think are needed? You give me one,
I
and
mean,
when you don't, I'll give you one.
we touched it hard so far. Pricing, which I don't know that I can tell you that I avoid pricing to a thing there, but for a T was I think in a large view, I think one doing a lot of work so far. I don't
Mm-hmm.
think you necessarily need that, but I think when you start moving outside of the $1, then I think you need a bit more aftercare. Right? You need the broker to care about it more. You need people close to the company to care about it more. The kind of movement after these things. So I think pricing is a big one. But for the most case, and yeah, $1 and below, then you can get a good amount out of it, and just probably goodwill, in my opinion. People will, I think, you come $1 and you're kind of business people don't have to think about too much, as it's something I easily understand,
That's another thing.
and then
Yeah.
and then I easily understand. I know feel a little something. It's not. And I want to shut down. I say, it don't feel like that to people. It don't feel a little like.
Yeah, but you're touching a
It don't
whole
feel
heap
like
of
money.
points there. Yeah, you're
It
touching a
don't
whole
feel
heap
like
of
money.
points.
And then the pricing come in nice, then yeah. And the pricing at $1 below, you get a good amount of people willing to go for it. And that's also another thing we think. We call it allocation, but that kind of come after certain things going. Right. So yeah.
All right, well, we'll do the first one. You said the pricing. You said pricing should be good. You mentioned
Should be
one.
good, but I say $1, but I don't. It's not. That's not the only way, right? I think if the price of it, if the public will look at it and say, "Yo," or a good amount of people within the public will look at it and say, "That's a good price what I'm getting," and I think that largely come down if certain companies list, then they can. It's well known enough thing. It can go outside of the $1. If tell me say KFC are still at $5. KFC are still for $5. People are go buy. KFC are still for $10. People are go buy. Right?
Yeah,
They feel good enough for that high price. But at $1, then a lot of things, there's a lot of forgiveness for what the company is. I wouldn't say I wouldn't want to use the word forgiveness, because I don't not necessarily that, but at $1, and I feel like at $1 and below, people are more okay with looking at nominal value and thinking, oh, I don't have to really think about the business as this bigger thing than it is. Yeah. So the business fall in line with the price in a way. I think that's a lot of where the pricing goes.
At $1.
$1 below.
$1.
Why? Because I think it's done a lot of heavy lifting. I think a lot of people have seen the $1 IPO and they expect anything above $1. You hear the question, why do I price that $1? Why is someone sell for $1? You hear it.
True. And you're saying and below though, and nowadays and below. I mean, and below is a relatively new phenomenon, right? In the past, in the past, however many years, how many below have we seen? How many things below that have we seen? We've seen Wigton.
I think of 3. Wigton, Fesco. And Woodcats. Was Cabroca's 80 cents? Cabroca's was what? Or was it $1 something? $1.20 or something like that? Was it below or above $1?
I'll check and tell you in a moment, but I see we have one person sending a speaking request. I approved. I don't know if they can hear us. Not JV Sosa.
Night.
How are you doing?
All right. Just came on to, you said about how is an IPO good, how to identify like what aspects of the IPO makes it good.
For you.
To you, yeah.
Nowadays, I tend to look on a lot of who is in it beforehand.
Word.
Like the previous shareholding of it. Like who is in it beforehand, the pools, the different pools. If especially if the initial investors get a pool for themselves as well, that shows me that the initial investors have a certain interest in buying it at the IPO price as well. Right?
Say that again. Well. You say if the initial investors get it below the price,
a pool for themselves. No,
just
any
if they have
price
a pool.
at all, but they have a pool for themselves and then get it at the price or below or a little below the price or a little discount of the price.
Okay.
Like this recent one where you have a pool for the uncle, the strategic, the directors, employees, all of that, but the price isn't that far from the IPO price. Right, so I tend to look on that nowadays. a lot more than I used to. So for this
So
one, there's like about 20 something of them.
so let's see. Yeah, it's a long list of the current. I'm not used to seeing this many names.
Yeah.
And there's a lot of familiar names, a lot of very well, like well-connected names, right?
Yeah, it's the most uptown listing since dollar in terms of the preserve, right? In terms of the reserve, right?
And I assume that the wording of the pool suggests
Mhm.
that these people can be in those pools as well, in those reserve pools.
Oh, you mean, okay, I get what you said. The wording of how the reserve pools in the Qantas.
Yes.
Yeah. Let's see.
Since this drop, I've been laughing to myself, Randy. I kept saying one new IPO drop uptown.
Yeah. Trust me. I'd say even more than dollar. In that dollar is just like
Definitely.
uptown. You hear about it a whole heap. Uptown, it was a whole heap. It was a whole heap. People saying that them get into it are asking. I got a lot of people asking me about it because, I'm get a link to the reserve area. But this is like we're already in.
I mean, here, who said?
You're already there.
No, uptown dead, bro. This is an uptown listing.
Yeah. But you
And
give out a whole heap of points there. Yeah,
I
got
think
continuous.
the fact that it can actually pass the minimum for the listing without the public.
You say must list.
You must list.
And I guess and spell something. This is they get you already.
It's almost, I think it's double. The reserve is double the minimum already.
What's the minimum?
Okay. The minimum is about 25 million shares, 25
million units shares.
Unit shares, yeah.
Yeah.
And the reserve pool is like 61, I think.
61.4, yeah. So the reserve is 61.4 million shares. So we are listing no matter what.
Yeah.
It
doesn't really.
Say they come for beg with no money.
And the way they price it to it's guaranteed. It's not really going to be appealing to like the everyday man. It's definitely not appealing to them, but it's going to appeal to a certain class of people already.
All right, well, hold on there. You mentioned that you said that the pricing is not going to appeal to the regular man. Is that really true? Like, why you say that? And the pricing mean on the Jamaican dollar side is $19.39.
I guess because
and
of
12 US
recency
cents.
bias. Because recently all the IPOs are listing around $1. So when they say 19, the 19 alone would turn them off from it. But I don't think this company really cares about those people.
So I mean that's a point there. What do you think about that, Danhai? Like them caring about the how do you put it? A certain class of people.
So my thought around this.
Uh-huh.
I like how you said it. It's not a one. The reserve is set up a certain way that it's enough to list at minimum without the thing there. If that wasn't the case, based on how I see and know of this company, I would still feel that way. I would say, oh yeah, this is listing not on the grace of probably get retail investor get up and saying, oh, I want some of this IPO. This to me, this is what I'm most listing already. This is not going to be well, the pensions never buy enough. The pensions are gonna buy enough. That's how I see this one.
I mean, the pensions are already in it.
This is the pensions, baby. That's how I see this. Again, I really have not read through his prospectus, but what I know of this company is, I mean, it was set up for the pensions, the whole company, right? This was we're bringing a class of investments to people to the market. I know what that really means. It's not and I never once said retail investors, the kind of investments that they're talking about bringing forward, factoring and receivables financing, and bringing that as an investable class. To me, that was man. So pensions need a new. Pensions want diverse products, and the guys who run pensions are making a company to provide for it.
Well,
and I guess that also ties into the fact that the people that are around the business come from that background as well.
It's very signals if you think about it.
Yeah, that's the first company I thought of.
Yeah, man, you're thinking right. It's the same kind of thing. So these guys are in the industry. This is, to me, this is one in a good way. This is a far more democratizing people that we talk about. We're moving outside of class structures, or the class is kind of changing up. It's no longer certain families own certain things, and the thing that it's people who them families who work from the ground up, give them an education, and them can they get to a certain point in life, they work for the big wig man them, and then eventually they can create something, and it's no longer I work for somebody and do whatever. These people are at a certain level that I know where they're providing the work, right? So very signals-ish, in my opinion, which is part of why I rate signals and what they've done. But yeah, this I never. So to me, again, it's I don't think they're waiting on a certain class. This is not a retail offer. This is not we're still on retailing to buy into this so we can live good. That's not how I thought of that. I very much look at this and say, oh, okay, yeah, man. This Agolis, this Agolis, and if I don't buy any, if nobody I know buy any Agolis, it's not going to be boy, we never. I guess the market wasn't ready for this kind of. Now when the market ready, that's what I see.
Yeah, the market ready. I don't usually buy the market ready or not ready sort of thing.
Me neither, but that is my.
No, I never think about it like that. Market ready, because
that when I hear that is my tell for we never buy none. Me never take out a pension and send it in there.
Yeah.
But because market soft is literally that's what they're saying. When they say market soft, they're literally saying me and my people them never said no buy it. Not spending
other offers like bond offers come and go all the time.
Exactly. Somehow, right? But the market
that's
soft.
True.
And they are asking for billions. So
and getting it.
And get it oversubscribed, upsized, all of that.
If you are give it must get in.
Yeah.
When the market soft, they're not talking about us. The retailer saying, so me not gonna spend the money this still.
That it's a whole heap of points to touch it. And by the way, and thank you, Jeff. I'm running you, but I'm thankful that you come on. You do get the promise discount to my money, JA, for participating. But you raise a bunch of points.
A bunch of points, great points.
So great points. So I don't want to lose track of them. One of the first things you said was that it's a good IPO is one where you also mentioned the same pricing thing that Danhai did. Another way, but again, you say, the $1 people like it. Immediately, you've been playing. It's so funny. So tomorrow I do my chill session, and chill session is I can talk easier with the growing subscribers. It's more private. I can be clear. But for here, I don't know what to navigate or Jevi say to. So I'll just I don't know what to navigate it. I can't talk two ways. I don't know if any IPO is done for the quote unquote regular people. I don't think he cared about that way. I don't think we're cared about that way. But I don't think we need to be cared about that way. Once you list, right? The stocks are there. And the truth is, $17, you can go buy one. Well, I don't think you can buy one share. I think the limit is 10,000?
1,000, I think it's 1,000.
$1,000. Well, that'd be 17 grand, roughly, or 19 grand. Minimum 1,000 shares, and then multiples of 100 after that. So if you have if you have 20 grand, you can apply, right? Which, yeah, I think most people can find the 20 grand. And certainly if you're into stocks or you're thinking about the market, you can probably find the 20 grand. If you can't, I'm sorry, but if you can, then you can. 20 grand, most people, I think, can find it. And if you can't and you still care about it, when it's listed, you can buy one share. Yeah, you can buy one share. But I don't want to lose the point. The point I had in mind was around that $19 price, that I think that where we are now in the market, Jeffy point is right. Once they're not going at $1, they're immediately saying something. In fact, think about all of the IPOs for the past few years, the ones that didn't come out at $1. All the ones that did not come out at $1, I kind of saying something. You remember GHL? Remember, I mean, granted, it's not an IPO per se, but it was a relisting. Yeah. And they were at 300. I think GHL was at 300.
They were at 700. I think it was 700. I think they came on at 750 or so.
Damn. So they came on, and the question was asked as to, why not do a split to get your price down before you list? And the response was various things, but it was essentially saying, we're not trying to, we don't need to, we don't believe that we need, 750 something. Wow. The response was pretty much saying that they don't feel a need to do that. And of course, the joke we've made here on Earnings and BrickTalk is that, well, the market split it anyway. Yeah, wow. I mean, May 10th, 2021, it was at $896.47 per share. Today, it's at $319.82 per share. Wow. Wow.
So they don't care where the ordinary people are going to drive.
And next point would be like, if it's priced at $1, it seems easier to move to $2 than if it's priced at $2, move to $4.
True. So retail perception of it. True. Seems
easier. So you look at $19 now, you want to double it. That's around 38, 39.
Yeah, coming close to $40. So that, funny enough, Danhai, going back to my earlier point to you, was around, when I was saying, the Wigton point, I was saying, if you think that it'd be good, if not if it would be good, but just a consideration, like what if they had come out at $1 instead of at 50 cents? Obviously, you half the shares. 19 to 20. No, sorry. Well, 19 odd to 40. So the doubling there. But there's so much less shares, meaning being offered. There is that point, right? So that one of the things that I think can be an ingredient of a good IPO is not an extremely large amount of shares. Obviously, if the share count is massive, the supply can be massive, individually massive, and then that of course can lead to a much easier falling in the share price. Somebody once said the confetti effect. So I'm saying that I'm thinking about Qantas here, where, I mean, they're coming to market for 50-something million shares. Without the upsize, about 50 odd million shares, right? Well, sorry, I count the part that the public gets. So let's be official. 83.3 million shares, but a good chunk of that is reserved. 60 odd, as I was mentioned before, is reserved. So what goes to the general public is 21 million. Again, I'm not counting the upsize here just yet. 21.8 million shares is a small amount, just a small number of shares.
And so they want to give the scraps at the table, bro.
I don't know, but I mean, one of the things I think that is needed for an IPO to be good is limited supply. 21.9 million shares is certainly in the range of limited supply.
Limited supply.
Yeah, even if you throw in the extra 50 million over the upsize, and those of us, well, the grower grads know my thoughts on how upsize really works, what it really means. So, but let's say we throw it in. 71 million shares is a very small amount of shares. And assuming that, the pensions will eat that up. Yep. So again, just looking at 21 million shares, that could be one of the
so the pensions will also be in the public. So we'll share the small boat anyway.
True. But you think the pensions will be active? Because
active, that's I don't figure they'll ask for some of the there'll be some of the application for those shares. So it won't only just be retail buying the 21 mil. I don't think so at all.
Yeah, I don't.
I think there's a thing in it that says if you're buying above a certain amount in the public, you go into one of the reserves.
Yeah.
Yeah, well, reserve can done, reserve. So reserve can done, when reserve done, then
everybody go public.
Yeah.
The what left spill over. So
in fact, for an attractive offer, the reserve almost always done. Yeah, going back to the same dollar, people were begging and fighting to get into reserve. Again, shows to the people listening, people join. I've mentioned some of the comments off YouTube, but for the people on Twitter, I said send a speaking request. We'd love to hear what you guys think what are the ingredients of a good IPO? In your words, what do you think is needed for an IPO to be good? It doesn't have to be on Qantas. I call it QA and the AR is slipping me. It doesn't have to be on the current Qantas Advantage. Oh, imagine that. It doesn't have to be on that, but we'd love to hear what in your mind you think of as a good, the ingredients for a good IPO. And as I said, anybody who joins, I'll you DM me afterwards and I'll give you a My Money JA discount. But yeah, going back to that point about the supply being low, and then of course if the reserve spills over, and if you assume that this is more pension oriented, I mean, it's not like the pension short of money. Remember that the pensions just get freed up to the other day, so the pensions just get something I remember was something changed to allow them to be able to do certain kinds of investments more, and maybe I think touch more equity.
No, it was thing there. It was private equity. I believe.
No, man. It's not just not no to private equity, but not just private equity. Is that an increase in the limits? Not so.
I remember the increase in the limits to private equity. I don't remember what else.
If you think about how they're managed, I mean, there's a percentage of equity that they're allowed to touch anyway. Well, they can touch a lot of listed equity anyway. Yes, the government was planning to increase the limit on pension fund investment in private companies from 5% to 7.5% initially, and aiming for 10% by April of next year. There is a lot that can be done under that. And bear in mind that even if the restriction on how much can go in any one vehicle is based on a percentage of the overall layout of the whole pension, right? So if you allow more to come in under a certain class, then you also naturally have increased what can be moved around in some of the other classes. What do you think?
Yep. My issue so far though is been long. It's been long. I don't know. I mean, I can't speak to what I know, but I don't know if we're still at the days where we're begging the pensions to make these investments.
I think we are still. What do you mean?
No, yes, I think that's it. It's you have a space to, so please do it. Like really, please, let's buy more.
Yeah, and even then,
it hasn't necessarily been a matter of limits, unless that has changed. That's the thing I wanted to change. If they've been maxing their limits, as far as I know, they weren't.
From my,
it's a begging thing. Let's buy some. Let's buy some. Why not buying any?
Yeah, and kind of stopping them from. I think I know they have been stopping them from doing is US stuff. Your pensions would love that. Yeah,
that's part of the beg. So it's like, yo, why you have so much in USD or global bonds, USD out? No, come buy some local and equity. It's a beg. It's a squeeze them and them said, nope, I feel that.
But
maybe things have changed. I don't expect so. So
we're
increasing limits. So let's hope that actually happens.
Well, think about the impact then also some of those changes. And even if it hasn't changed, think about what an IPO like this then means. Because this is not just a regular IPO. It's not just on the local market.
Yeah, to me, that's free capital. For money we could have spent there. So this is the limits going here.
Well, or here, the point I'm making there is we know the pensions love and want the US dollar. Anything in the US, you can get any US denominated thing them love, right? If you leave it to the pensions that invest everything in the NASDAQ and the NYSE, and overseas, global bonds, yada yada yada. So for the economy, there's a limit on that, thankfully. But then when you have a vehicle like this, like you said earlier, then it look like it's almost created. This is a dual listing, the listing on both markets.
Okay, so that's very good.
Yeah, right. So up from the jump, it's dual currency. That in itself is kind of,
to me, dual currency has always been a tell. It's never been for us. It's not you saving the USD on their carpet. It's the pensions really like investing in USD, so do it for them.
Yeah, and going back to the Cygnus point, Cygnus also came to
every
market.
single one of them duals, bro. You can see it. Why is only them? Why is only those companies that do well? Well, there's a reason.
There's a reason. It come out of it. Well, no, to be fair, AHBC do well. Not HBC, ASBH, AS Bryden. AS Bryden is a
it's a pension friendly company, bro. It's a pension friendly company, bro.
Who's pension? Who's pension? I see we have Lopo also. I don't want to lose the point. Lopo, what's up?
Lopo listing this one.
What going, bros?
Not much all gone.
Yeah, man. Yeah. Me did ask Danhai something, same thing where him just say. You say increase limits, but isn't it increased limits for foreign investment? And I say go.
Depending what you're talking about.
What you were talking about, what you were talking about a while ago. I want to make sure I get it clear. Was the when you were speaking about the increased limits? I'm like, is it? From my understanding, was that they actually got more percentage to get more leeway to do more foreign investment.
Oh, I don't know. The thing I was thinking about was them being able to do private companies. I read private equity. They have private equity increase, so you can do more private equity things.
Oh, okay.
Private company has ran
that different.
The foreign investment thing, I don't know.
Okay.
As far as I know, they've been trying to cut down on the pensions, just swinging the money to USD.
Okay. Well, okay. So that different then. It was private. Okay. Yeah, man. Yeah. Well, my thing was thinking was the private. And I guess to you,
Well, hold
your
on.
question. You want
Yeah,
go on,
I
Andy.
mean, what make you think that this is a private equity company? This isn't. So I'm trying to go through the things I want to say or I don't want to say. I'll say this. Remember, Epley is a approved
Investment.
Yeah, but private.
It's a private
They,
equity thing there.
they are a private equty. I forgot what they are. Venture capital company.
With the venture capital.
Yes, but so is this. Right?
I really don't know why any of that matters outside of
It
league,
matters.
like especially for like I mean if it matters based on how it's written on paper for what different financial structures can do with certain type of vehicles. I really don't know the tangible difference outside of that. So I don't I don't know what to parse with that. I mean,
Yeah.
I guess there are also other financial reporting and
And what
elements
you
to
can
them.
go into
Yeah,
if certain things are restricted. Like, is this an overseas investment? Because it's a
I mean
Belgian
No.
company,
Oh,
but it's listed.
yes.
it is an overseas investment. True.
Yes.
But then the pensions get to be in it, right?
Yeah, that's
It
true.
is listed locally, and if they got in early, as we did see, as not Jevi said, if you look at the list of current shareholders, we see pensions. We see amongst the familiar names, you see a couple of pensions also, right? Already.
Mhm.
Now, if you assume that like maybe those pensions are in at their limit, but it's now going to list. When it lists, does that give them a new limit? Yes, is it no longer just a private equity investment? So then I can up my stake, which
Because
is
it's not public.
because it's no public. It's a different class of asset, right? It's no tier one. It's no level one. Publicly listed asset on a publicly traded market, and it's on the Jamaican market too. So for Jamaican rules, it's for you get me? So maybe I could, let's say and this is not how the numbers are, and I'm spitballing here, but let's say that my limits were in investing it before it listed, because it was a foreign investment, was 2% of what I could. But the second it lists, it now qualifies for me to maybe go up to 5% of what I can, right? That's linked to maybe my second one of the second things that I think is needed for an IPO to be good. I think is needed for IPO to be good, which is deep pocketed demand.
Right.
Yeah, deep pocketed or sustained demand, because none of us have as much money as the pensions.
Yeah. I mean that was actually gonna be my general response to your general question.
Okay, well, let's hear. Yeah, sorry, I don't want to take your point. Go ahead, let's hear it. Well, what do you think makes a good IPO?
I guess that is different.
Well, that is the
There's what
question, though.
I
So
think.
tell me,
Yeah,
what do you think are the
There's what
ingredients
I
needed
think,
for a good
and there's
IPO?
what I think people think is a good IPO. So all right. So what I think is a
Uh-huh.
good IPO is an IPO that I can see increased demand on the initial price
Mm-hmm.
or in what I plan to own from the IPO and going and I guess post IPO. Whatever my investment plan is around that, I
Mm-hmm.
can see project a first a timeline where there'll be significant demand, and that's gonna drive the price up, so that the my sell is going to be a profitable one. So that could either be just from the flip, that could be a year down the line, some months down the line, or years down the line. But I have a timeline that I can see. Um, a reasonable expectation for the demand to increase, for the profit to be gained. So that's the general idea of what I can say a good IPO is. Um, and in scrutinizing the prospectuses, it's just going to be based on how plausible I think that type of expectation is. So that's it. That's the long and short and simple thing. I think to me, every time, if we're just speaking in layman terms and people are generally talking about their good investments, if even if I want to use foreign market or whatever as the example, it really only comes down to the I invested in Apple in 1994 and blah blah blah. It's like it's all share price related. It's not about there's no there's no calculation. Dividends are too complicated. People not involved. It's just what is the actual price result that you have. So that's my simple way of looking at it.
Yeah, the simple way, not. I don't think it's wrong. Yeah, I might, and I do put maybe some more attention in what people say versus what they actually do. But I also put a lot of attention on the fact that what people do very rarely matches what they say, which leads me to my second question to you. You said that, there's what you think is needed for a good IPO, which matches a lot of like what I try and say on YouTube, IPOs with interested parties that will purchase a large amount of shares for higher than the IPO price consistently post IPO, thus reducing, the liquidity in the stock, which might be viewed as bad. It's funny because, I think that's a learned position. So that's a sensible position. That's not often what you hear from people. They think of the high liquidity as good. Sometimes before.
Right.
That's why you hear people consider
like working for them,
Yeah, man. If you think about it, a lot of the reactions around woodcats when the prospectus came out was, oh, this one good. And then when the allocation came out for woodcats and it was like what, 50 or 60% or whatever you went for, they were like again saying, oh, it's good. And here we are today, 1 month after the fact.
Liquid.
it's very liquid. It's very, very liquid, and it's down. It's down from IPO price already, right? Close to that 83 cents. So down already. Versus IPO price, I think down 7.odd%.
Big up the 90 cent price then, because the 83 could have sound worse.
True. But do you think that if woodcats was okay? Well, a dumb question. I think if you think woodcats had listed at $1, do you think it still would be here where it is now?
At 83? Yeah, probably.
Probably. I don't know if I disagree with that. But if you think it listed at 50 cents or 90, let's say it listed at 45 cents, you think it would be?
I think it'd be not that big a drop.
Word.
Yeah.
Well,
I mean, I think it's possible. Yeah. Percentage wise, I guess it would. Percentage wise, it could get to the 7% pretty fast, based on again the liquidity, as you just said. But I don't know. I feel it's 1 month in. I feel like Woodcat has some legs to go before I would just put it into the flop category. It's only flop if you're looking for IPO pop to me. I don't have the I don't have a full system of calling this flop yet.
That I am with you there. I mean, I get 1 month. A listed company is a very, very hard thing to kill. And you have companies that are listed. You have companies that are older than the market, on the market. So you 1 month is like it just starting the journey. But we have to admit that for a lot of the retail,
it's flop because it don't.
Yeah, exactly. Which is again, so what do you think that people think a good IPO is?
I think people think on the very the simplest terms, they think the good IPO is the Shan tweet breaker days of post listing. So that the breaker get broken every day for the first 2-3 days or the first week if you're lucky. Um, that's the that and it come with the hype. It come with the hype of that. It come with the hype of that energy of there. And them say, yeah man, that shot.
A big thing they realize is they don't know this happens. It's not
I
when you
don't know
get
how it
the
happens. It
company
just
out of it. It just if it happens, then the IPO was good. If it
yeah.
doesn't, boy, it's slapping on boss.
Nah, nothing to do with the company. Have to do with the hype and the price flying and no matter why, no matter how, it's just happening. So it win.
And don't ask me before the fact. Me, I wait to see too.
Exactly.
So,
One to watch, we have to see.
so that's the funny thing. So like I asked this question now, and it is a difficult question for people because I see what it's like when I ask people and them struggle with it. It's almost like I'm pulling teeth. What I say, yeah, man, is like I say. So what is a good IPO? And nobody knows. Say nobody don't know. Nobody. But then you very clearly can say that XYZ IPO is not good.
Mm-hmm.
So what is a good IPO? What makes a good IPO? Like I see Andy B at Bimrock Capital on YouTube say this is one of the best quality IPOs ever. I assume he's talking about again QA, right?
Mm-hmm.
What makes it good? I'll read more of what he said. This is what the market needs, and I don't know if he says why. Andy B, I'd love if you could join us on this and tell us why. But if you don't join us, if you could put it on YouTube, type it. I'd love to see. The next thing he says is very funny. So he says, to me at least, given the flimsy nature of retail, I believe they would be targeting long-term institutional investors. Which,
Well, all of that be big man. No, big man. Come join. Yo. I want to go on
yeah.
yourself.
But I think you can pretty much say, I think the they in this case is QA, Qantas, right? So he's saying that Qantas is targeting long-term institutional investors because of the flimsy nature. I don't know if that's
How that works at all?
yeah, because I think that maybe conflates an understanding of what an IPO actually is.
Right. And
Money,
to speak to some of this, I mean, I get what he's saying, but I guess the only flop IPO then was the equities IPO
ooh.
and Alliance.
And if you go
If
back
that's
a
what
little
he's saying.
further, I think Justin Nam's
Right.
attempt at the time.
Mm-hmm.
I don't remember the name of that one was.
Yeah, it was another. It was like
exponential.
exponential capital.
Yeah,
Mm-hmm.
you'd say that, right? But again, funny enough, exponential is the only IPO I ever truly consider ahead of its time.
Word.
Yeah, it's the only one I consider to be ahead of its time in that. What I mean, look at what exponential was. Mm-hmm. That sort of company, like how it was maybe viewed then. Yeah, never busted because that sort of company has listed many times since, including this.
Yeah.
Including this Qantas, you could say, right? And I see a lot of people also saying that that they're drawing the parallels. I think Danhai is maybe the first person here who did it. Draw the parallels between this and Cygnus.
Mm-hmm.
Yeah, again, Cygnus is also very, I think, institutional friendly. But there might be a reason for that. But let me not talk it all out. I see a bunch of people joined. Let me ask them first. I think there's Tav, then Kamoy. Tav, what's up?
How do you, Randy? Why am I regular now? So we make somebody else take his space.
All right, well, let me
Somebody
hear.
else talk.
Let me hear a come on saying, come on, what's up?
Yeah, even Randy. Danhai.
Evening, how you doing?
Boss, what's up?
Much. I like the topic. All right, for me, when you come on to Good IPO, one of the things I used to judge a company, prospectus. I said to myself, I'm not really employed to the company. So whatever the listing has to be, has something attractive. Whether you get dividends, it's undervalued, or the use of proceeds is going to for expansion, not to pay off debt, but for expansion, I can add some value to the share being listed. So those are some of the things that I see over the years that make a good listing that you might get at capital gains.
Well, hold on. Let me. I just want to make sure I have those listed properly. You say so. It has to be. I go. Say them again. I want to list them. I know the not.
Yeah. All right. So be a good dividend yield.
So
the price
a
need to be
dividend
attractive.
pair, but you won't know if they're going to pay dividends at IPO.
Well, that's true. But at least if it's mentioned in the prospectus that they're going to pay a certain amount of yield, then you can probably bank on it. You know.
I mean, all of them speak to that, though, no?
Every single one. We can.
You see the chop, Randy? You see the chop?
You say, oh. You would listen to them, though.
Yeah, but the most common is 25%. But for me, still, if a company if they're listing to raise capital to do some expansion, whether building new locations,
All right, that's a second thing, yeah.
Yeah, building new locations, then I can say the share price is undervalued prior to listing. So you can assume that you can reasonably do some projection to say when they get the funds and they do the expansion, there should be some cap gains. Earnings will go up, PE will go up, and everything will go up. So that for me is a good listing. Otherwise, if it's to pay off debts or working capital, not really attractive. Like Woodcats, one thing that turned me off about it. The use of proceeds wasn't really attractive. Plus I realized that. Plus I realized that before listing, they withdraw some dividends from the company, almost 100 million. That was a real.
By the way, that's very common.
Yeah, that was. Yeah, I know, I know, but that's really.
Boy, as a business owner, I would love to comment on your view, but go on.
No, man, I'll let him finish. I'd like to hear what he's saying.
No, man, that's what I say, making continue, yeah.
But I mean, if you're listing the company and you withdraw 100 million out of the company, and then you're saying you want investors to give working capital, that's not really attractive to me. You know? So
that's
I didn't
a good
participate in that one.
That's a good point. That's a good point. I never thought of that. That's a very good point. I like how you frame. Literally, you change my entire view right there at the end. You pull 100 million out, but you ask me for money, and part of it, all you ask me for money for is for working capital. But you just had working capital.
Exactly.
I respect that, because the first part of the thing I'm so used to hearing and I'm not necessarily in agreement with, but I like that view on it. Now, considering that, you know why, in the case of Woodcats, you know what they took the 100 million out for, right? We know who got the 100 million.
Yeah,
it went upstream to the owner. Detail. Is that necessarily, that don't change the view to you at all? Because if you make a private equity investment and you sit with it in the early years, the hungry years, and you carry it to the point where it's listing, is it so bad would you not want to be able to pull 100 million out? If you put, I think 300 million in, and then you babysit it for 10 years. And then at the 10-year mark, you're going to list it so that you have an exit event. You're going to it's going to be worth a whole lot more. And you get to pull 100 million of cash out when you need some cash. Is that so bad?
Well, it's not bad enough, because I mean, they built the company, so it's
they didn't build it. They bought it.
They didn't build it. They bought it and they improved it, I guess. But I wouldn't argue the fact that they took out 100 million. But for me, as a new investor, that's not really investable for me. You know, there's not much upside when I look at it, you know. So kudos to them, man. They got the full amount of money that they wanted. So they're all making profit. They got about their principal, the 100 million, and whatever proceeds going forward they get. So it's good. They invested in the company, they built it up, so I can't argue with it. But as a new investor, that's not very attractive for me. So I just leave it as that.
That make it unattractive for you. All right. And the next thing you mentioned it twice. Well, I'll say that I say Lopo have it man up. So I think I want to say something to that.
I just wanted to say something to one of the points, or just ask a question about it. So there's a lot of conversation about this debt situation. A lot of people want here in the IPO to be listing out that it's going to be taking the money and doing all of these new developments or new locations or new stream of business or whatever, right? But they don't want it to pay down the debt. The process of doing an IPO is such a arduous process. You have to find a broker, you have to deal with all of the legal ramifications of changing your type of company. You have to do all of that.
Mm-hmm.
The process of debt is, can you get approved the cash that you need to do something from a financial institution? There's this myriad of, so you're as a business owner, you're supposed to look at it as like, okay, I want to do this business venture. Let me go through all, let me go IPO so I can go to the public and say, hey, public, help me do this. I need some money because, boy, when I do this, it's going to be amazing. Instead of going to the bank and saying, hey, I want to do this. Can I get some money? And then say, yeah. And then I go to the public and say, hey, I did this thing. And yes, this is the situation that we have because I did this thing. But this stuff has already been implemented because this is the expansion that we're doing based on that debt. And I just want to take back that money so that you guys can be a part of the thing that I already did. It's just a serious difference in terms of mindset for me that people are always expressing, and I don't understand it. You actually have to evaluate what the debt is, one, what it's doing, two, and how the business has, if there's any yields from anything that they've done before or any of the debt that they took out, fine. If it's not yielded yet, then look at what the IPO is going to do in terms of reduction of debt, and think that you're going to get the spoils of whatever that development that you thought would have been so good if they did the IPO for. So that's my main contention with this constant, oh, well, they took out debt and the IPO is going to take out debt. Yes, you have to take out debt. That isn't bad. The fact that they could get the debt is the point. They could get the debt, they could list the company, and they could continue is the point. So, yeah, that's my point to that.
I think it's largely a financial literacy point, you know. And
hold on. I want to hear. Oh, sorry. Go ahead, Danhai. Go ahead. It's cool.
I think on most people's interaction with debt, they don't see it as in most people's lives, it's not presented as a good thing. It's not. Use of it is often lifestyle and boy, thing hanging over your head and whatever. So people don't see that in that light, and it seems like it's like a different turn with the same thing.
Mm-hmm.
When you're speaking about it from a corporate standpoint versus a personal thing, and people can't relate the two very well. So then you have that point. People have a knee-jerk reaction to that is bad, that not good. So yeah, that's how that usually goes across. So the fact that you think about it like that, you're a step ahead. The truth is you're a step ahead of other people.
That's Lopo.
You're right. You're right. Yeah, Lopo, you're right. It's I'm going to do the same expansion, but do I wait on an IPO and hope to get the money and convince people? Because one of the big things we forget it's when a company tells you about the expansion plan, it's not the proof of concept will reach it. I have to tell you, say I'm doing this thing, I have to believe say I can do it. Versus I'm gonna borrow the money, I'm gonna prove some I can do it, and we'll just clear the debt, and all profits will flow to you because debt is no longer in the way. Bad thing immediately. Yeah, it's cart on the horse.
Yeah. Well, I want to hear from I want to hear Kamai's response to that. But let me hear, Jeffy, what you're saying to that.
All right.
I was going to add the point of the debt as well. the debt was already there and the IPO to free the debt, basically. The point would be like, when you free the debt, that frees up cash, right? And if you care about dividend, they can, in the future, pay a bigger dividend if you care about dividend. You free up a lot of things for them, free up a lot of burden. It probably that was high interest or a longer time or whatever, and them just pay it off one time now. They can even take on additional debt at a cheaper rate to expand on top of what they're expanding already. And all of those factors. So debt is not a bad thing when them say them will come clear the debt with the IPO money, because it depends on what debt really is.
I just think that people don't like seeing it. They treat it a certain way. It's
sort of, yeah.
Yeah,
Come on.
and I could say one before we get back to, and I could say there could be examples of the debt where it is questionable. Like even what I would consider a good IPO, Atlantic, if the debt that was used was the whole reverse, basically the debt that's on the company to buy itself, almost basically. I care about act like I have the full framing of it in my mind.
Well, and
But
I understand that maybe you don't, just in case, because I don't know if you can afford a lawsuit.
right, yeah. Please, yes. Yeah, so all right, so get the jargon out of it. But if the idea that I'm projecting, I'm not saying this is what happened. If the idea that you're seeing that you're evaluating that debt, that it was just basically almost used to buy the company in a transaction, and that is what's being cleared in the IPO, I could say, yeah, maybe I don't like that. Like I could say that.
You think of that as bad?
I could say that. I could say that maybe I don't find that as attractive as I have debt that was taken out, and since that debt it was used for whatever expansion I needed or whatever. I think I could frame that as a better use of debt for me. But I'm saying that about a company that I evaluated the company and I thought I bought into the IPO. Like I liked it,
I get
even
you.
with that. So, is kind of, you have to evaluate what is happening with the company. It's a little more simple than that. I think it's a little more simple that, well, there's debt there, and that's what them say they're using the thing for. That is managed. They can manage that.
All right, but
If they were
hold on.
just going, yeah,
Let's not go too
yeah,
far.
yeah,
I
never
want,
mind.
yeah.
Yeah.
Come on, yeah, because it's 2 points. I want to hear what you say. You think to that? Come on.
I don't have an issue with companies listing to clear off debt. If the say for example they have high interest on the debt that they have and they're clearing off they come into the market to raise capital to clear off the debt, that high interest debt, and it could free up, reduce finance costs, increase revenue, and therefore make the PE argument more attractive. But it all depends on what the pricing of the IPO is, because if you price it as it should be, and there's no room for cap gains in terms of when that debt is cleared off, it's not really making much sense for new investors. So nothing is wrong with that, but it's just the way that you package the thing, and I've seen with Regency where they convert the debt to shares. So sometimes when you're doing the listing, they can be more attractive. You could convert a portion of the loan of a debt. It depends on how you package it, but if it's not going to reduce the finance cost and increase revenue to a point where there's there gains in terms of the PE going down, or it's not really make much sense
to you. But almost every debt listing does that, though.
Yeah.
Almost every debt listing
the conversion isn't actually this big different thing there.
Some might say, right? Like I mean, I participated in which one did I put together? I did the Edifocal thing, and that was a debt conversion. Was that good or bad? From your perspective, obviously not from my perspective. From your perspective.
to be honest, I didn't participate in the protocol. I didn't fully understand. For me, if I can't understand how you make money and get a good idea, can do some projection, I rather stay on the sidelines because I couldn't really fully figure out ed tech business.
I get
so
you.
I stayed out. I just avoided it.
I get you. I mean, that's fine. I get you. I get your point. But I think maybe the point, just to button this, I see Tav and Jevi want to jump in. I want to hear what Tav has to say on it. But I think if I can speak for everybody on the other side of your point, Kamai, what people who know it will tell you is that, listen, listing to pay off debt is not a bad thing. Because I see it said all the time. Yeah, them a list to pay off debt, me not like that. What? One, since when we don't like it. So many listings will love that doing that. Two, why wouldn't you want that? If the company has to, and this touches the point that Jevi made about dividends. If the company has to pay, if I have $1 million and I have to pay it, I have to pay that loan comes with interest. That interest is on top of what I have to pay back. That means that not only is there the principal that I could be paying out as a dividend, but there's more than a principal because I have to make those interest payments. So if I replace that loan with equity by doing the IPO, that space that you'd still have there for interest, that can be dividends or that can be profit, right? It strengthens the company. So I'm very fearful of that becoming a popular thing of saying that, oh, I don't like when companies are listing to pay debt, because it will scare companies from listing to pay debt, and they should. And on the other hand, if I have a company and it makes candles, and I go get a new candle machine, and that candle machine can make my company make a lot more candles and hopefully more revenue, more profit, I can either IPO, get the money from the IPO and buy the candle machine, which is what we all love, right? But that's just the accounting. That's accounting class example. That's not real life. Real life, I run a company that sells candles. I have an opportunity to get a candle machine. I go to my banker, and the banker gets me the money for the candle machine. I buy the candle machine, and then I come to you guys and I say, give me the money to pay off the debt that I owe the bank. If I never get the candle machine, you wouldn't believe that I could make this many candles. And if I have to get the candle machine first, the banker is not going to be as happy to lend me, right? But if I have a good relationship with the banker and them lend me the money, you guys would want me to get the money. Sorry, the thing I skipped here was I said bank, I'm thinking the broker. You guys would love for us to come and say, hey, we have a candle machine we want to get. Give me the $1 million and I'm going to buy the candle machine. This is all the things we can do with the candle machine. Everybody would love that. But the banker, in this case, the broker, wouldn't list me if I have to say that. But if I get the loan and get the candle machine, the broker will then say, oh, okay, you have the candle machine, so you can produce this thing to make revenue. You just need the debt to be managed. So we are willing to list you to get that debt managed. In fact, we're willing to buy some of it also, which is why so many of these IPOs, including this one for Qantas, you notice it has the broker listed in it as an owner right there. The broker believe in it so much that the broker put their money in it too, right? So broker here being JMMB. So I'm very strong on that debt point. You don't want to beat yourself up and get it into the drilling everybody head about. I don't like when companies are listening to pay debt, because if them list to pay debt, that means that the company is stronger. Lopo's point I thought was interesting about the kind of debt. And that's a different conversation. Oh, what kind of debt? But the truth is, even if it's bad debt that you're paying off, meaning terrible debt, maybe not the best, the smartest acquired debt, you're still paying it off. You're still making the company stronger. That might be more a question of, do you trust the management now? Do you trust the management that made a decision to take on that kind of debt than it is this good debt? But Tav, let me hear your point, and then I see Andy B join us from YouTube, so it looks like him come to answer your low post. So let me hear what Tav saying, and then I definitely want to hear from Andy B.
Yes, sir.
Yeah, man. To the same point, I mean, as a person where I grew a business for the past 10 years now, or let me say I grew a company for the last 10 years now. Start from literally nothing and growth every year. And last year we decided, say, all right, we're going to pay out a dividend. And we pay out a dividend last year to me and wifey, to our own company. And, you know, I mean, I say, we're actually still in a growth mode. And we even need capital,
So
which
you pay out
we
a dividend.
actually are working on now. But that no means that we can't pay a dividend. You get me? I say? I mean, we are grow the company for years now, you know, and we have to reward ourselves at some point, so we pay a dividend. But the truth is that if I am going to come to the market with my company, remember, I start this company from nothing, right? Build it right up every year, financial report I show growth. Look good, and I decide, say, all right, I go public and, you know, give the public a chance for own a piece of the thing when me and nurture from it small, and them can get a value out of it. The company can get the extra capital for do another expansion or whatever reason we have for the capital. I mean, some of the time people have to just look on it in the way and say, yo, I'm gonna bring him company, come to the market, him never have to do it. You now get the opportunity to own this thing. You are an investor, and a lot of the remarks that we get about certain things just clearly show you where the person where I try to invest, where them want out of it, them goal. Because if you go complain, say, oh, they're using the debt to clear the capital to clear debt. You not look like you plan to stay with the shares along. You know, you are somebody who probably want to flip the stock. So because that now you now see the early signs of any return from the company, so you know one day. You know, it come like a lot of time you hear so far we talk about Atlantic, you know, a lot of people it vex about Atlantic are listen thing, and you have people who make 180% in the share price movement. So a lot of people give up the opportunity of making 100% on their money just because them think say what Atlantic is do. Now go reward them. But as an investor, you have to know where you invest for. You invest in capital appreciation, you invest in dividend, you have to know that, and you have to act like say that is where you invest for. Because the points where you bring up in the group, Randy, I'm almost sure say during the discussion, a lot of people went into Atlantic because of the points that were mentioned within the group. So while other group and other people are say, boy, this is offer, you know, good, that, no, whatever, this, not that. People who think on it on a different level end up and make 100% profit on their money because what? If you invest in capital appreciation, how the company run or what the company use the debt for do might not be the key driver of the share price movement. I can just have a bridging.
True.
We have shares in the company and him decide say, oh, Tav, me then at the company with Tav from 5 years now. You know, I buy in a stake in the company. I have 10 million shares where value 20 million before it lists. Oh, I go buy up 5 more million shares and make me 20 million become 50 million by buying up these shares. So me willing to spend, so me willing to spend a couple million now to make when me have where we're 20 become 50. When me I do with the debt as a manager, nothing to do with my shareholder decides I'm going to buy up the share price or buy up own more shares to make it value more. You know, so because I am investing for capital appreciation, me I look for my investment in a way for gain capital appreciation. So for the company, so the point is that a company I come to the market, them now look for investors, them I look for capital.
That's a key point.
So
sorry, continue, Tav. Sorry.
Yeah, man. So earlier somebody did mention about Qantas looking for a certain type of investors. No, Qantas are looking for what Qantas want, which is the money and maybe access to the market for come later on, come raise or whatever. Them the business who want to give them the money. Them just want the money. Because nothing going to stop with them plan.
Maybe they do, but hold on.
Yeah.
But let's hear from him now because he joined us.
Man.
So I'm actually happy that he joined. I'm assuming it's a he. Andy B.
Hi, can you hear me?
Yeah, man, we're hearing
Yes,
you. How are
sir.
you doing?
I'm doing good. How are you guys?
We're doing great. We're doing great. So, yeah, as you hear, obviously, you touch a couple of, you step on a couple of toes with the comment. About the us flimsy retail
No, I
investors.
think it's a matter of perspective, and I think how I have approached this in viewing Qantas's IPO is really through the lens of and going answering the bigger question on what is a good IPO, and even answering Cal's point is what am I trying to get out of the IPO? So I know when I am investing, I am looking for capital preservation at a minimum, but I'm looking for income. So for me, Qantas is good because it is distributing a minimum 85% of their earnings out to me while protecting my capital. That matters to me. Now, the nature of, I guess, more when I say flimsy capital, being retailers who are looking to jump in and jump out, that for me is really an opportunity set, or rather a lack of opportunity set for Qantas, because given they're looking to raise in excess of 2 billion, I view that really as this is long-term capital, patient capital, because for an institution, they're looking for this investment to give them the pension funds to get their 9% return, not just today, not just tomorrow, but for the next 10 years. So I approach it very similarly because I am looking now for that return of capital in the form of dividend while protecting my capital along that ride. And I guess it's more so a matter of my philosophy in that I look to capital to grow steadily over time. I'm not looking to jump in and jump out.
Okay. So, you say a few things there. One, you mentioned Qantas's dividend policy of they have a target dividend payout of at least 85% of their annual after tax. So that's what you are depending on. So first of all, you believe that they'll stick to that?
Yes, that's my intention. And that is my intention. Going back to understanding the underlying assets themselves and their investment approach, they're looking to acquire assets that would be distributing capital to them back to interest or capital repayment to then be deployed again. So I've looked at that business line to say, okay, they're generating that cash and are looking to themselves to then redeploy that. Yeah, so that's my perspective on that.
So, but you skipped. Well, I don't know if you skipped it or you gave us a different answer. I'm saying, do you believe that they'll continue that 85? Because again,
yes.
So you do believe that they'll stick to that 85%?
Yeah, because also, so I view it more so as a fund rather than I guess a operating business where
Operator.
you're
Yeah, I get
selling
what you're
goods
saying.
to customer. So because it is more on the capital side versus the
management,
the physical side.
Yeah, they're not fixed assets.
I
They're
view
not.
that is their intention.
Yeah.
So that is that's what appeals to me. So anything that will be distributing capital back to shareholders in that form appeals to me, and that is why it would be a good IPO for me.
All right, but here's what I'll ask you though against that. Two points. One, you know how these things are. It's a dividend policy. A dividend policy has as much strength as the color of the fund.
Yes.
Right. Two, typically we understand if you know a little bit of how businesses go, the dividends that happen before a company lists very often are very different from what happens after the company list, right? Meaning,
yes, I do.
Of course, before we list, I don't mean like the right before IPO clean up and payout dividend. I mean they're showing what 2 years of strong payouts, but they knew in 2024 that they're gonna list. They knew in 2025 that they're gonna list. What you do when you have a company that you don't have other shareholders in is a completely different thing from when you are publicly listed. And by addendum to that is they are speaking of themselves as being in growth mode. So them being a capital intensive company, and capital is literally what they do. You know, if they pay out a dividend of 100 million, that's a loan of 100 million that they can't give without you know, I guess without borrowing more.
Well, that is the nature of working within this space. And I guess it aligns more with other investments I have made. So this would align, like, I'm not sure if you're familiar with like business development companies in the States. That's the nature of the business where they have to use the capital. So yes, dividends paid out before matter, but going forward, and I think the institutional support that they had pre this thing, and I think the general appeal to me, that institutional support shows to me that this aligns my value set. So I'm comfortable with that. And things happen, but that's the nature of things happening. Like you put in.
Do we lose it?
Andy?
I'm still hearing him. You guys hearing him?
I'm not hearing him.
Well, may I hear Uno, but may I hear him?
Sorry, you could tell me the last thing you said?
Sorry, I just heard you said,
yeah,
and we're the last thing we heard from you was the nature of the, and then it just dropped.
I guess the nature of, I'm trying to remember what I was saying.
I think you're saying that just the type of business that it is one where, yeah, capital is what it does. So, you know, it's just the nature of the thing. But my question then is, why then do you believe that the dividend policy will be followed, and maybe followed at this level for maybe the first few years?
Well, because when I approach it, I'd be approaching it because this isn't something I'm looking to hold for a few years. It is more so a longer term commitment. It is a 10, 20-year commitment.
Okay.
And I guess that's my position in that whatever happens in the short run, that happens. But capital, given the capital intensity of the business, I expect that they will manage, they have the management expertise to navigate that. And, you know, I guess the management expertise gives me comfort in their capital management. I mean, the chairman, you know, we talked about Dr. Adrian. So, I mean, Dr. Stokes is just like the team is there. And I guess, and it's, if that changes, then my underlying philosophy would change.
True. But you're right. The team is stellar. I mean, going back to the point that mentioned again, a lot like Cygnus in that it's not unknowns that are in this, right? It's post, I say post, but known industry names. I mean, you mentioned Dr. Stokes, and who stood out to me immediately was actually Jacqueline Sharp, who is ex-Scotia. That's not, it's not small fries involved in this. So we know that they have competence in terms of managing this whole thing. They're connected enough to also touch the big enough deals. Qantas is not really a new company either. If you're in the spaces enough, you've come across their name. So they're pulling it. And then the name.
Also add to, I'd also add to one of the things that I read in the prospectus is particularly that they're targeting securitized credit. Now, I guess I am, I guess, quantitatively inclined. So that struck out to me because with like the change in banking regulations, banks and brokers may have to offload some of their loans, and this would be a vehicle for them to do that. So that showed another opportunity set to invest in this fund.
Massive opportunity set, actually.
Yes, sir.
But
all right.
Yeah, that's stuff I plan to talk about tomorrow privately, not here. Yeah,
this was made how it was made by the people who made it. for reasons that they know and see. Yes.
Yeah, right.
It's not it wasn't a book up. It isn't, oh, I'm starting a bank and I want everybody to walk in the door because I think I have a good idea. I think I know how to run banks. It's, I see the needs.
This is, I used to run banks.
I used to run a bank and I see the needs of the banks, and let's work this out.
Yeah, that's why also that pension point I mentioned earlier wasn't accidental either. Sorry, Andy, go ahead.
Yeah. No. I guess just echoing that, and I think because of the nature of the management, it's like you're almost investing in a high quality in fixed income fund. That is how I look at it. The only equity part to it is that it's listed, but that to me doesn't matter because my exit game is not a year, 2 years, it is 10, 20 years, pass it on to my son. So that's my mind game entering into this, just based on the nature of it.
All right, I like that. Well,
I hope I answer the questions and not step on people big toe too much.
No, that's good. No,
step as you feel.
Yeah, man.
It's your opinion and your money, right? So
exactly. Yeah. I will ask this though. I'll give you a little bit of pushback on this. So does that then mean that you don't mind, and if let's say you put and by we're in April now, so it's listed by November. It's at $12.15. Still good?
Well, does the underlying economics change?
Company is still a company.
That would just, well, yes, but in terms of what is management's opinion on the trajectory, because that is now a buying opportunity, because now it's time for me to double down.
Okay.
Because if I can buy $1 for 50 cents, why not?
Okay.
But enough people say that I not do it, you know.
No, that's why I stress testing him out, because that is true. But I wonder if you really so cool. That's November. April 2027, we're now at the 1 year mark. It's now at $8.15. You still good?
Well, have they paid out their dividend? What is management's opinion? Have the underlying economics changed? I go back to that. Like, I'm not using the market as my benchmark to say, is this just because the market price dropped? Like, I've seen my portfolio drop 60%, but that provided me an opportunity to say, hey, does my underlying philosophy change? It hasn't changed. I still continue to believe in the business. I see management communicating. I see their activities. Management may say, all right, prices have dropped so much. Do they want to do a repurchase to build back up their shares? Is that something that they would consider as a way of getting some sort of incremental return, if that matters to them? But that would, to me, would continue to double down. And unless the underlying philosophy changes,
you would not have an issue going in more.
No.
I like that. All right. So no, but I wish you were part of the girl group, because the conversation I want to have with you is not one like the girl subscribers know. Like, we'll talk off here in a different way than I talk here, because I'd really want to see if you're serious about it. So tell me. So we're now at the 1 year mark. They're down, what did I say, 850? So that's more than 50% loss from the IPO price. But like you said, but the company itself is still strong. In fact, they've grown more than they even projected initially. The dividend is being paid. So maybe at the 1 year mark, that's the first time that they're declaring a dividend, and the dividend, the price is more than halfway down. So the yield on it is more than doubled, right? So it's a nice yield. 3 months later,
even more attractive.
Wow. All right.
Even more attractive.
I'm not disagreeing with you. Okay. So before I do the part B, did you invest in Signos?
No.
No.
So fun fact is that I'm actually not based in Jamaica, but I'm coming back that time.
Okay, well, send the money before you come back. That's okay.
Definitely.
The market will take it. The market will take it. So I'm asking is because one of the similarities between this company and Cygnus is same sort of thing: strong financially technical backgrounds, strong financial management, very clear financial plan. And the only suffering has been around the share price. Now, granted, in Cygnus's case, they also exacerbated that not in my opinion. They exacerbated that because they did an APO. I think they did two.
Yes.
Which they did a dilutive secondary offer, which it had the effect that it had. It is nowhere near its initial IPO price, but the company Cygnus is strong. Danhai say it every week is one of my favorite companies. One of my favorite companies too, in terms of like we're nerds.
It's mine too. It's mine too. It's one I observe every time they produce the results. I look through it seriously to say, okay, is it underlying economic?
Oh, that's
I
funny.
even asked a few questions. So it's just like, how is a private credit business in Puerto Rico doing? I mean, you really have to delve deep into it, and you'll probably pick it up. But I'm not looking to the market to say, is this something that is worth its weight in gold? To me, it's just like, is this an opportunity to get more, or is it overvalued? But
So you
my
truly
timeline
is not determined by that.
my
So you are
timeline is
truly
long-term.
caring about the company versus the share price, which is something that people tend to conflate.
Yes.
Okay, I really respect that. Actually, I really respect that. I don't know if I have the financial stomach for it sometimes, but I do respect that. Because the part B
But
is
remember, I guess one of the things that I look at it is you're taking on risk. You can't want the upside
without risking.
If you're not able to stomach the journey.
Yep.
If you can't stomach the journey, put your money in a savings account.
Oh God, I don't agree with that, but I get the sentiment. I know what you mean.
Yes.
I know what you mean. I know what you mean. Yeah.
But yes, I agree. It's really hard
or you invest in
getting
something
people along the
safer.
line,
Yes, but I think
really hard to get
it's
people
an
there.
emotional journey. It's an emotional journey that people go on, and seeing your money drop is one of the hardest things for you. But this is also part of a bigger. I guess my bigger perspective is that is this money you need today, or is it money you need 20 years from now? And separating the two is very different, which goes back to my approach, where it's more fundamental and not market based.
But I'll give you the biggest pushback on this. I actually agree with that point. However, at the point where you need the money or want the money, it is now market based. Unless it's a forever hold, unless it's a true pension that you're going to build and you will live off the cash flow. So you are building up a true position in a company that, I'm never going to care about the share price, but I do need the operations to continue to be strong because my dividend yield in 10 years needs to be double digits. Unless you're doing that, at whatever the appointed time is that you are looking to cash out, the market does become important.
Yes, it will become important at that point. And I think for me, one of the ways I guess I walk through that experience is along the journey, how reliant am I then on it when I get closer to the point of cashing out? So, say for example, using your
Made up
earlier
example.
roadmap of it falling and falling. I know that my cost base over that period of time would have fallen, say for argument's sake, from $20 on average down to say 12. But the market is now saying it's out at 9. If I'm looking to exit, I would then have to make an assessment. Is this something that I guess I have to evaluate it then, because it's not just a one size fit all, and I mean it's part of a bigger conversation, because like I mentioned, I'm passing this asset on to my son. So if it is like I want to sell some and go on a trip to Hawaii or somewhere like that, it's like, do I need to tap into this? So I think it's part of what I'd really probably respond to it as probably the income I'm earning from it. I may not need to exit. I may not need to exit because if it's still paying out the same yield, say it's pay a yield of 9% initially, like cost basis of 12, my yield is now 15, 20%. I think I'm comfortable retaining that asset. I guess something material, truly material, would have to change for that to happen. And I'd have to take it on the chin then. But I think along the journey, once it's continuing to meet its objective, then I'd evaluate.
All right. I'm with you there. There's a little bit of pain maybe near the end there, because the truth is, if you need it and you can't, like, you need to consider the exit before you get to the exit. However, you are right. If you are building up that sort of position, it goes right back to what you're saying. The risk is the risk. You can't have it both ways. You have to. You can't have the. You don't. No, you can navigate that risk. There are ways to navigate the risk, but that's where the expertise comes in, and that's where different people walk different paths. That's part of actually why I don't mind us talking about Qantas. So I want to talk about Qantas because I think that Danhai knows this. I hear it every day. I hear it all the time too. People want to hear, oh, it's good or it's bad. Oh, buy it and it flip tomorrow, right? Or they don't even want to say that they want it to flip tomorrow.
Life is so much. Yeah, but I think, but I just, sorry to jump in, but my
no, go. It's fine.
You try to simplify everything to an on or off, yes or no. Where there is so much more beauty in the complexity of
the company. Yes.
Why?
Yes. You lose so much trying to simplify.
Why? Why?
Because the people want a decision. That's really it. They're not really. They don't care in a lot of ways.
People are outsourcing a decision. Yeah, they're outsourcing that decision.
Yes.
And oftentimes that can be trying not to do the hard work. Not to do the hard work. Not to say, all right, if I'm not sure about it all the way, let me take a step back, like woodcats. Or, I mean, I see a lot of listings that I say, I don't feel comfortable investing in this, so I'm not touching it. I can't sleep well with it because it doesn't achieve my objective. And I think oftentimes going back to what is my objective? My objective is for long-term income and capital preservation. Does it meet that objective? Or is it something I want to just make a quick money on? And if I want to make a quick money on it, I should know that if I go buy the money on cash pot and the number don't call, I lose the money. And I think it's having that hard conversation with myself about it and being honest with myself about it. That listen, I'm not taking on that type of.
So I respect that a lot because, and it matches what you said on YouTube before, that a good IPO for you meets your objectives
internally.
But Randy, me feel like Andy B would have do good in advance in the group.
I think so too.
No man. Yeah. Let me tell you why I say it. The reason why I say it is because him say a lot of things, but there's a thing. Randy have this gift where I not him gift. I just think him just learn things and get smart over a while. When you say you want something, and when you explain it, when you explain what you say you want, it's like him can know say you don't really want it. You think you want it, but you don't really know. Because
what I do is I hear what people really want, and it's not often what we say. So what's funny is that, like, Andy B is, I don't get these conversations often because he's somebody who is saying what they really want, and he's pointing out the perfect point, which is you really should go for what it is that you want. I was going to push back when you said, like, you know, if what you want is the flip on the IPO, then really, but he's not wrong there either. I push back on the cash pot point, meaning there's a huge jump between the I want a flip, I want some money quickly, and the cash pot. That's where I come in and I say that if what you want is the quick flip, then you need to know that, you need to say it, and more importantly, you need to know what it takes to get the quick flip on the market, because again, what you want to happen is not guaranteed to happen. The market doesn't owe you it. So yes, you want to buy it at $1 and sell it next week for $2 because you want, what you really want is 100%, but that's not how 100% is made, or that's not how 100% is made anymore. So like Tav mentioned earlier, how Atlantic, which was also a quote unquote flop, 180 something, 170 something percent. It's just, you have to be able to look on it and know that, oh yeah, 100% no isn't going to be made in Shan's thread. It's not going to be day one, buy day one, sell day 3. It might mean,
and it's not going to look like it either.
And it doesn't look exactly. Like exactly. Like with Tav, when you mentioned 180%, I was thinking, you know, I don't really say it, but because people wouldn't know. But you make a lot of gains these days from stocks that people consider to be flops. From stocks that are flops, some things that are terrible. Shan, not Shan, big up Shan, but Shay mentioned it a couple of months ago with the NCB, 20 to 40. That's 100% during the time when every headliner say that NCB is sinking. That's 100% on something everybody's saying is sinking. Point is that knowing what you want is the most important thing up front, right? But then the second part now is knowing how the journey actually goes. And that's what I like, that Andy B sounded. You see, I give him the signals running now. That's really hard. Andy B, the next thing I was going to say is something I see Tryon said on YouTube, which is that now you're a year and a half into it, and they do an APO. Now, if you understand the concepts of the APO, you are now locked in. That's a dilutive secondary offer.
And the term when we use is long term.
Beat you exactly. But if, in other words, it takes a true stomach of platinum to still average down even the face of that. But like I was thinking about it, looking on Cygnus, because that's what happened with Cygnus. Years into it, and they did the APO. You would have to keep dollar cost averaging, and you would still be at a loss. No, if you're doing 10 grand a month in Cygnus from IPO till now, you are down 24% still, but you are experiencing strong dividends. Strong dividends. You're experiencing very strong dividends. But you are not seeing cap gains right now. And the truth is, you may not see cap gains for, well, you mentioned maybe if they pull off the Puerto Rico, maybe they fix it, list it on NASDAQ, then suddenly you might have a massive amount of cap gains. But barring something like that, you're going to take a hit. But you literally give an answer that sound like one of the few people who sound like, yeah, I can really take it. If the APO, you participate in the APO, in our hypothetical, Andy B, you participate in the APO, meaning, well, yeah, would you participate in the APO? It's at $5. Remember, you bought the thing 2 years before at 19.
Well, I guess understanding the journey that would have taken us to 5, I think that would be a part of it.
Okay. I'd say just retail disinterest, and
sometimes looking around in the room that you're in, because there would be other institutional players who would have committed serious amounts of it, their capital. Do they want that sort of dilution? Are they willing to stomach that sort of dilution?
Well,
think about the group on the beat.
I'd say that, but are they willing to stomach that sort of dilution? And maybe historically they have, in fact, they've encouraged it because in many ways the prevailing, my assumption of the prevailing thought by them is that they also don't mind. Also, most of them are playing with OPM, right? Other people's money. So I won't work here 5 years from now when this doesn't, when this hits the fan, right? And in many cases also, they're also thinking pension like. So yeah, 20-year decision, I don't mind. We'll come in because we're also, maybe we're not being diluted, maybe we're participating, so we aren't facing that sort of dilution. But it's, I mean, thank you. It's rare to hear that sort of thinking. So.
Well, I think I'll probably just end on is that as the journey continues, I'd have to take note. I'd have to say, okay, is this something I feel comfortable with? Kind of going back to my further point, I'd have to watch the journey. Is the underlying belief around the market dynamics the same? If that hasn't changed, then it may make sense, because my real exit is not at the APO or after the. No, for me to say, hey, this is something I feel comfortable with. So this would now be, maybe this should be something I consider going forward. But where I stand right now, because the future is not certain, but I can definitely show what is in front of me is like IPO is there. It makes sense.
I get you.
It makes sense to me.
So I know you're definitely buying into the Qantas IPO then.
Yes, it's the business model as well. Because I would say that I have other styles of investing that other investments that align similar to this.
All right. All right. I like that. I like that. At some point we may become fellow shareholders. we may at somewhere along the journey, maybe after their first APO. But like I said,
it was
Qantas,
really good, bro. Thanks.
Well, no problem. Thank you for coming on and telling us.
Trust me.
Yeah,
Good
man.
talk.
Cleared it up.
Yeah, man. No problem. No problem.
Who was next in line? Well, Danhai, I'm happy that we heard that.
Indeed.
Yeah, very happy, especially the risk point, right?
Yeah. It doesn't usually start how he starts and ends. And end how he ended it. So kudos to him.
Yeah. Heavy kudos
but,
to him.
But you see the thing that do Randy.
What's that?
One of the reasons why may I say if you think about the group is that the whole reason for you investing is really the money. I just that it come down to the money.
Oh no doubt. No doubt.
So I don't know if a next man that want to invest because him just like a company and him just willing to just give them him money because him like the company, or him want money. So if it is really about your money, maybe there's more than one way how to achieve your goal, faster or make it more sure say you'll get to it.
But to be fair, I mean, I'm speaking for him here, but I don't think that what he was saying was that he's not investing for his money.
Exactly.
No, me not go against it, The reason why I bring it up is that what I'm trying to say is that there's other ways how to get where him want.
Because you and I know that, and I'm sure he knows that also.
Yeah, that's why I say, that's why I said, he would have get a more insight and probably he would have adjust where him do a little bit different to make sure say him get there, because the long-term thing is dangerous. We see time and time again, everything dangerous, but we see time and time again we're in a lot of these big, massive companies, stock price just boom, 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 way down to the ground. And then you can imagine you're there in this thing 10, 15, 20 years or who in 30, 40 years and decide say retirement time now. No, me I go cash out this or no, me need to take some money out of this stock for do what me did want for the withdrawal. Yeah, man. Yeah. So no, me just say there are probably other ways to make sure so you can get to that.
No doubt. In fact, I just like you, I'd want him to join the group too, because I'd love to hear I'd love to hear how he sounds a year from now when he tweaks his method. Because the truth is part of why I stopped myself earlier going into it, but it's part of why I wanted us I knew it would come up for us to talk about it too, because I want us to think about the investing, us being Jamaicans and everybody listening to this, to think about investing as larger than just whatever our preferred method is. And that goes for the people who want the long term, quote unquote, but it also goes for the people who just want the quick flip. Like, just look outside of what your method is, and you might find points that help you to achieve what you want, just in a different way. So, like for this, I think. Oh, sorry, you're saying something else, Andy?
No, I'm just saying definitely, and I agree with Tav's point. Is that yes, there are other ways, and I think it's continuing to ask myself, is there a better way to do this? Because I don't want to be headstrong and go down the wrong road and say, where in the world am I? And I think it's continuing to remind myself that I can make mistakes, but how do I pivot when I have new information that tests my core thesis, that is the business still doing what I'm expecting it to do or not? And I think sometimes I use that analogy to align my goals with what I would believe, say, core investors, other large core investors would have. Like somebody I observe from the outside is like a PB Scott, where like a lot of his investments, listed investments, are very dividend focused. So there's a lot of capital that is paid out. So that appeals to me. So I'm saying, okay, how is he aligning himself? And you could say it's follow fashion, but at the same time, he's not somebody out there looking to lose money. So
following his fashion has been
like,
very profitable for us here.
Demonstrating. So, I think it's walking through that to say, is there a better way? And are my interests aligned with the anchor, the core investors' interest? Because that to me is the bread and butter. That to me says their interests are the same place as my interests.
Well, yeah, you sound like you.
But yes, I'd really like to join the group. I'd like to join the group so we could.
eremical.com/grow. If you send me a DM on this, I mean, I can give you some more information later on. Danhai, you're about to say something.
Sure. No
oh yeah. I mean, they mention our follow fashion, but yeah, there's a big thing in that. A lot of people want to be pioneers, but then nothing new under the sun. This game has been going for a very, very, very long time. It's very unlikely that you find something that nobody else ever thought of, right? So sometimes it's very okay to be. Not sometimes, it is very okay to be follow fashion as long as it works towards what you want to get out of it.
Yeah, and the beauty of the market is also that
there's a reason. Again, poor Warren Buffett, but there's a reason we keep hearing his quotes, eh?
Yep.
There's a reason. Nothing wrong with following. Just make sure you know where you're going.
And they didn't start out. Munger and Buffett didn't start out on their own
exactly.
either. Exactly. Who was the guy? I always forget his name, but the guy that they started with.
Intelligent investor.
Yeah, he did the cigar butt method, right? Where that you buy something, you get some amount of value out of it, and then Buffett came along and did something on top of it. Buffett with the hungry years did a lot on top of it, and then Buffett now step back. Munger is gone, and have a new generation doing something out of it. So yeah, nothing wrong with that at all. Because I was happy about what he said.
Graham.
Ben Graham, yes, exactly. Ben Graham. Because I'm happy about what Andy B said. I want to point out for anybody listening or watching to it, maybe some of the downsides around the quant thing, meaning my personal fear, one of the things that could be there is I don't like when management and operating part of the company insulates itself too much from the share price. And the structure of the thing is set up. I mean, they get that they get that 220 good, bad, or ugly, right? And the 220 can't change unless they agree. but they just I like the things that were being said by Andy. But let me not spend too much time on that. I will jump over to Mastermind Shane Bennett.
Yeah. Night, everyone.
Night.
So.
Yeah. So listening to the conversation since night, and you guys really, said some very interesting things that got me to really start thinking, right? Even before joining this conversation, right, it was a conversation that I was having with with my coworkers about those companies that most similarly match the value proposition that is being offered by Qantas, right? And of course, Cygnus Credit Investments came to mind first.
Yeah,
And
Cygnus is the
even
number one.
yeah. I mean, if we're talking about alternative investments, then especially private credit, then you cannot leave Cygnus Credit out of the conversation. Now, going beyond that, and even just listening to you guys talk about what the economic moat is for Qantas at this time. We talked about the
I wouldn't think that. Well,
policy.
Do you think that matters?
What, the economic moat?
Yeah.
I mean, for an investor, you would want to, especially if you're looking for long term, you would want to invest in a company, but at least for me, with what I would call a strong economic moat.
All right. So I'm gonna make it two things. One, for the regular folk, the non-financial amongst us, like me, who afraid of maths. What do you mean by economic moat?
Okay, all right. So when we're talking about economic moat, we're really just talking about what is more so the value proposition of the business. What exactly does it do? How defensible is that business? How strong is that operating model? And just looking at it as more so a going concern. Can this company provide predictable recurring earnings?
I would think maybe I have it wrong, but I would think that the economic moat is what can we do that nobody else can do, or other people.
What protects us?
Yeah.
Okay, maybe.
What about us is defends our business? What protecting us from being everybody else?
Yeah. What's difficult? What do we do that's difficult for everybody else to do?
Yeah, so maybe economic moat is not the right term to use, considering
I thought it's interesting. I thought you're actually going to go down that road.
Considering that you have other companies listed that do similar things as them, such as
those, but that don't mean that doesn't mean they don't have a moat, by the way.
Oh yeah, no, definitely. And the economic moat in this case would be tied to those members that make up the governance, such as Adrian Stokes and I don't remember her name, that the lady coming from Scotia. So they have a strong board and so, and that ties to the economic moat because I mean there are only so many individuals within the industry with that level of experience and expertise within alternative investments, right? So I mean that does add to it.
Okay.
It was like you have a different viewpoint on it.
I don't know what you're saying yet, so I'm waiting.
Okay, so I said all of this to say that while listening to your conversation, I got curious about okay, what if I were to compare Qantas to, for argument's sake, Cygnus, like on a pro forma standpoint, what exactly is the EPS considering the 2025 numbers? What is the PE multiple relative to where Cygnus is currently trading at this moment, right? And on the surface of it, the offer is actually priced at a discount. If it's fully exercised, it's somewhere, and this is really more so a back of the envelope calculation. It's somewhere within the 18 times range. And if it's just if they
bro, I know the thing we're good at on this thing is that we we want to bring everybody along with us on the journey, right? So I mean, so what's the point? What's the point to what they are? What's the point to them having that multiple? What does that mean?
No, that's what I'm getting to. They know.
Okay, sorry, I don't pressure you. And the people watching, by the way, can see it. So I just help support your point. So Qantas on the JMD side as a P at 18.8 18.06 times.
Yeah, yeah.
And
Fully exercised, I believe. Yeah.
correct. But we expect it to
Versus Cygnus, which is trading at around
12.1.
12.1.
Correct. So Cygnus on a PE ratio basis is better.
Mm-hmm. Yeah, and then it then begs the question, okay, if I were to invest in, for argument's sake, Qantas versus Cygnus, on the surface, it would seem that you could potentially be paying a lot more for each dollar of earnings based on the multiple that you mentioned.
Qantas versus Cygnus?
Yeah.
Because
Although I
have
would
a
say
higher
that,
PE.
huh?
Because
By the
have
way,
a higher PE.
yeah, because of the higher PE. And beyond that, it then begs the question, okay, and this is more so me taking a step back and playing devil's advocate at this point. Because one year paying a higher price per dollar of earnings, right, for a company that is about to list. And we have to also just consider the opportunity cost of it. Because if it is a case where we're looking at Qantas, the next best option would potentially be Cygnus, which is trading at a much lower multiple with a history of consistent dividend payments.
Correct.
Right. So in that regard, it then begs the question, is Qantas, I would say, that great an opportunity for argument's sake, a retail investor, one who is more so oriented towards income or would like to have more, who would like a company like Cygnus or Qantas because of that income component that it could possibly offer.
What you calling income? The dividend?
Yes, the dividend. If we're not talking about price, I wouldn't really talk about price performance, right, with them, right?
Why
I
not?
mean,
why not?
All right. You guys mentioned it earlier. You said that even right now, Cygnus is trading below its IPO price. I mean, of course, that would have been partially due to the dilutive effect of the APO that would have happened. I think they had two APOs since their IPO, right? So, in the absence of that, maybe there could have been, and it's a strong maybe, there could have been some price appreciation based on
No,
that.
I won't say there's a strong maybe. I'll say if Cygnus hadn't done those APOs, their price would almost 100% be much higher than it is now. They did this to themselves.
There was price appreciation.
Yeah, that's true. That's true. Yeah,
we used to love Signals on this show for the price appreciation. For the price appreciation, we were very much enjoying back to back to back to back.
correct.
Okay.
It spiked up to January 2020. Cygnus was trading at a higher $26. Yeah, they're heading towards 30. We're proud Cygnus shareholders, but they did it to themselves. Yeah.
Okay. All right then. Fair point. So with that in mind, then, right? In what I would consider a somewhat depressed market, where returns
Not on this
year
show.
to date have, huh?
Market not depressed. When you say depressed market, what do you mean? Sorry,
I mean, where returns have been somewhat selective to a few names locally,
Bro,
right?
you're talking like you're reading the news. What you mean? Just say what you mean. Share prices have been down. Or are you talking?
I promise you. That's the way I say.
Yeah, just say it. Yeah,
All right. If we want to be straightforward, we see where the
I would love
market
that.
has been, you know, on the surface, you see where year to date it has been up around high single digits, but that has largely been concentrated to more so the main market and a few quality names. I would say that year to date, I haven't really seen any strong price performance for companies outside of manufacturing and distribution. Of course, you have one or two financial services names that have done pretty okay. But for the most part, to me, it seems as though most of it has been concentrated to, like, those companies that provide a physical product. You would agree?
I don't. It's not an
Not
opinion
easily.
thing. It's not an opinion thing. We check.
Okay.
From the start of the year till now, number one is till as this moment we're speaking is whipped up 739%. If you want to put the asterisk beside whipped, MFS. It's going to rain. MFS is up 76.9. Jetcon is up 68%. TJH, People's Champion, TJH USD is up 36. TJH JMD is up 35.7. Ace Bryden is up 31. KP REIT is up 29. X Fund is up 24. I won't read them all, but I'd say it's across the market. It touches a lot of, yes, there's financial services, but yes, there's also goods and services. There's also distribution. I mean, there's consumption.
Remember also that's a lot of the market. Manufacturing, distribution, and financial services is almost all the market.
Yeah, correct. That's true.
Yeah. But so I'm saying you don't need to coach your point unless your point depends on being coached in the market performance. You don't need to coach the market performance. Just if you tell us about Cygnus versus Qantas, you can say which one. Tell which one you think is better. You can say which one you think is better.
I would say that there's a saying, a bird in the hand is worth two in the bush. Like for me personally, the fact that Cygnus trades at a bigger discount, and it has that history of dividend payments, while Qantas, as one of you even mentioned, is in a somewhat growth phase, right? If I were an investor more so focused on income, then the opportunity cost of investing in Qantas relative to probably putting some more money in Cygnus could be a little too much. Well, not could be. To me, it would be a bit too much. I would probably want to adopt a wait and see approach to see, like, okay, you guys have listed now. Like, what type of timeline can we look for? Like, what type of cash flows are we looking at, right, going forward that would be able to meet these dividend payments? Because when a company talks about paying 85% of its earnings as dividends, that is one thing. What's to me more important is what the cash flow statement is saying, right? And if it really comes down to like looking at what your next best option is, then to me, the offer is a bit rich.
Rich, okay. So in other words, to you, Cygnus would be a much better place. If you had $1 million to invest tomorrow, you wouldn't put in Qantas IPO. You'd rather put in Cygnus.
Yeah, that's where I would probably put it.
You already have money in Cygnus, I assume.
Yes.
We figured that out.
Bird in the hand.
That's a bird in the hand.
I really wanted you to say no, but
there's no way he could have said no, bro. He said cash flow. Cash flow is there.
The nature of opportunity cost, is if you're waiting. And that's when you're waiting, you're in the business of cost more than opportunity.
Correct. When you're waiting,
you're waiting and seeing. So a big part of the market, depends on what you're going for, who you are. But a big part is looking at what you have in front of you and saying, what I think will happen, how likely is it to happen, and then run with the risk.
To back you up, mastermind, I haven't done my full prospectus work to make an opinion, but I don't think you're wrong. I don't think Cygnus is a bad buy compared. I don't think so. I haven't done my work yet, but I don't necessarily think you're just wrong.
This doesn't have 2 APOs behind it.
That's true. So I haven't done the waiting from that and all of them. So that's true.
That is to be considered.
Hey, Danhai, let me give you an example.
Behind it.
I remember when me used to have bad credit, I'm gonna go to the bank and me and the lady I talk and she said, boy, Me know you pay off your thing them, but you still have bad credit. Me say at least you know what me I gotta do if me get in a bad debt. You get me? I say? At least you know. You get me? So the truth is that Qantas or something when I do not APO yet, you know? Them, you don't really know what them are gonna do, but the other man do fee one already. You get me? I say? And you know what the other man do already. So just because certain metrics you look on, you might miss out on something where probably be much better than where you are things say you have, you know. So a lot of times the opportunity come in a different way and it not always look like opportunity. Me can't say that enough. Now go look like the opportunity. Because if it was, everybody would have run it down.
Yeah, exactly. A couple years ago, I mean the PE. I love everybody loves the PE. A couple years ago it wasn't like that, and then some years after that, me and Randy looked at the PE and explained what exactly it actually is, and you know it sounds very different when it's not, you know, when it's not. Oh, how much dollars of earnings are you? What does that actually mean? Like the dollars of earnings you're paying for. It's one of those things that sound fancy and whatever, but it doesn't actually break down to anything when most people are looking at it. Which is the truth when you actually check people. Most people aren't trading on PE for that, and that's likely for that exact reason. What does it actually mean to you?
Yeah, because bear in mind in this case, mastermind, the PE sounds like a strong part of why you would prefer Cygnus over Qantas, because Qantas at IPO is coming right now, at least on the JMD side, with a PE at 18 times. Cygnus already listed has a PE at 12.1 times. So Cygnus is better on the PE side, but why does that matter to you?
Yeah, what does it actually do for you?
I mean, just working through the mechanics of it is a big selling point, or a big part of the selling point for both Qantas and Cygnus would more so be like the dividend payout ratio. Right? So if we're talking about the dividend payout ratio and we understand what that formula is really just the dividends paid divided by the earnings. So with that in mind, it would naturally translate to, okay, then if I'm paying $10 for $1 of earnings, right, and your dividend payout ratio is 90%, then that would translate to 90. Like
no, you're bringing in how much you're paying. That's not part of the dividend payout ratio. The dividend payout ratio that you just spoke about is you're basing that on what they make compared to what they pay out. What you're talking about now is dividend yield. You're comparing how much you pay to what you get for what they have paid, and that's a different thing.
Yeah, naturally.
Yeah, very important that you know the two, because if you hit me the fancy terms and I don't know, I'd run down the gully with you with this dividend payout ratio and say yes, but it's not quite true, right? In terms of Cygnus and its dividend yield, dividend it does have a strong history of dividends, but its dividend yield has improved over the years. It has grown over the years, right?
Yeah, it's
as the business has grown. As the business has grown, it has grown, right?
And the price falls.
And the price has fallen, so the yield has continued to get better. So literally the lower price has been one of the things that has made the yield much more attractive.
And
the PE.
Exactly. Yeah. So if you think about it,
exactly what I'm not. I don't think I think we're talking opposite directions there.
Really?
Yeah, man.
You're telling me the PE is great because it's lower, but the PE is lower
because
it's not great. Yeah.
All right, repeat what you just said.
The price has fallen.
Yes.
So the PE being lower, would you say as partially a consequence of that?
Yeah.
It's not only that the profits have been going up or anything like that. The price has been going lower.
Yeah.
If I've needed that money, I have not been able to get it back at anywhere near what I put in.
All right, then. So let me pose a question to you guys, right? You have, for argument's sake, 500,000. Cygnus is currently trading, like for argument's sake, at the end of last week at around $10.50.
It's trading at 10.25 right now. Let's work with reality.
All right, let's work with reality. I haven't looked at where it's at as of today.
That's fine.
My money JA.
Yeah, so that's 25, right?
$10.25, yeah?
$10.25, right? At that point, it's the multiple is around 11 times or 12 times or whatever the case may be. The dividend,
12.1. Multiple is 12.1.
12.1. And the dividend yield is close to 7%.
2.62%.
2.62%.
Yeah, if you want to work with the annual dividend yield.
Okay, so that's the trailing 12 months dividend yield.
Oh no, trailing 12 months is nicer. Yeah, it's nicer. Last year's dividend, you can use last year's. Last year's dividend was 9 at current price, 9.5%.
All right, so I'm using the trailing 12 months dividend yield, right?
That's cool.
And at a price of $10.25, that would be close to 7%. I have that 500,000 right now, right? I can either buy into Cygnus at the $10.25, right? At the lower multiple, with that history of dividends, that current yield of around 7%. You're not getting that in any money market securities, right? Or I can.
I don't know if you can say that.
Not right now.
Looking at repos right now, yeah. If and CDs are like what, just around 5% or so. I mean, that's
did Chris Berry send you? There's a MIL bond right now that I could buy, and that's a 10%
trust
bond.
me, there's no way Chris Berry could send me, but
that's a black mark against you. but 10.5% per annum. 10.5% per annum is what you get. I'm mentioning Berry because MIL has an IPO out, right? A bond listing right now for 10.25%, which beats their dividend yield. Cygnus' dividend yield easily.
So I guess not.
Yeah, all right. So let's not use money market securities. Let's just stick straight to the market. It's one of the higher dividend yields.
Well, the bond that I'm mentioning is available to the public. Anybody can buy
it. Yeah. That's fine. All right, but let's stick to the realm of just equities or stocks, right?
All right, so $500,000. We're going somewhere.
Yeah, so 500,000. You can either put it in Cygnus, which is currently trading at $10.25, or you could put it in the offer, right? And
what about the other 100 and odd securities?
Yeah. No, I mean, if it is a case that you're looking at one of the two, remember that this is really what the scenario is. We're looking at one of the two.
All right. We created a prison.
Talking about the opportunity cost. What's your next best choice here?
And again, just to be clear, we can't put it in any other whole heap of other securities.
No. We're just looking at one of the two.
Quantas or Cygnus.
Yeah.
And you're saying, here's the issue here. You have defined what we want for this money. You just said pick one. What's the base of my choice? So why am I have a reason to pick what do I want?
To a company that has local/regional footprint in the alternative investment space, particularly private credit, and you're more so oriented towards income, right? And that's in the form of dividend.
Why do we want this exactly?
No, it's just putting forward because that is
part
of the.
It's either Quantas or Cygnus. Cool.
Yeah, because that is right.
When I asked for around $500,000, if a client comes to me and says $500,000, and they want and re-breaks down to Quantas or Cygnus, I'm going to ask them again. All right, but what do you want for the money, returns wise?
Exactly.
Okay, we made our restrictions on exactly what kind of investment we want to make, but then we're not investing for investing's sake. So what kind of returns you want for this?
What kind of returns you want for it? No, I just more so focused on income.
What to do for you?
Whoa, my brother. Okay, no.
You haven't broken it. It could be either at that point. I could pick either one of them, right? Because both of them say they're paying dividends.
Yeah.
So what's the thing that's making me choose one or the other? Are you really asking which one I think could give me a better return?
Well,
that's what you're asking.
Yeah, that's definitely the part of the question. Yeah.
Are you sure?
Yeah.
Because you don't sound like it's part of the question. You take
and that's
regional,
part of
yada,
is
yada,
it part
yada.
of the question or is it the question? And it feels like the question with
all
the constraints.
All right, just call it that. It is the question.
No, man, no, hold on. I'll jump in here. That's a dangerous thing.
Oh,
that's
yeah,
how
I often do this, by the way.
Yeah,
I talk to the people on the show and then
because that's how now you end up following the dogma of something that you don't believe, but you just think so. Because remember, it's Danhai that brought it to the what do you want for the money. Until that point, you never thought about it. You told us about a regional strong investment. You said income. What's the income? And you can jump in if you need to. But the idea I want to say here is that you go back to Danhai's core question, because that's where, again, maybe I'm just biased and I know Danhai, so maybe I'm biased that way, but that's where real people live. If you told me that what I got for my money was that I am part of a regional focus, yada, 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 but I'm at a 40% loss, I don't give a damn. What do I want for my money?
All right, then, before you go any further, how would you be at a 40% loss if, as at this moment, you're not invested in either? I say you have the 500.
I'm saying in a year or in 2 years.
A year or 2 years.
Check where Cygnus was.
The point really is that it's not necessarily about the vehicle. The vehicle is a vehicle. It gets you to where you want to go. So you figure out where you want, and then the vehicle comes into play. It shouldn't be that you tell Randy, yo, I need 7% a year on this investment, and Randy's response to you is, oh, you can go into private equity or alternative investments. Randy should give you the options based on the returns you're looking for, not the other thing. That's like me. You come to me with money and say, "Oh, you're World Ventures."
Man, so World Ventures.
Hey, that's a regional opportunity.
That's a region. You're not actually speaking about the vehicle. is the thing you're looking at should lead up to, okay, this is a return I'm looking at getting based on these reasons. And the reasons are not specific, are often not specific to the specific business model of the thing, the kind of thing. You can go into that, sure, but when you listen, so when you tell me what you want for your money, neither Cygnus or Qantas fit it, then different conversation immediately, right? But which is why which is where I got where I was going when I said, boy, are you okay with it? We got, end of the day we ended up at what do you want for your money? Because you're saying everything about that.
Yeah.
And you're asking me to make a decision on 2 different stocks, 2 different securities, and we have not spoken about what kind of returns we want for the investment, what we want out of it. Then I can't really give an answer then at that point.
Yeah, so if you force a Cygnus or a Quant, even then I don't know. You can tell you the good or the bad. Really. Yes, you make great points around Cygnus. They're proven in terms of their dividend payment. 16 dividends since they've been listed till now. And Qantas is telling us that they intend to, but every single company intends to. But when Cygnus was listing, they said they intended to, and so we're doing it. So you can't believe just because Qantas hasn't done it yet. Well, Qantas isn't listed yet. If you look at their history, they have done it. When I was talking to Andy B earlier, I mentioned that, hey, sure, they did it when they were not listed. And what a company does when it's not listed tends to be a little different from what it does when it is listed. However, even if you take them at their word and they are going to do the sort of payouts that people would hope that they do, well, then maybe it's a chance to get in earlier. Well, flip it now back to Cygnus. Cygnus has done their APOs. They've done their 2 APOs. They've gotten the funding from that. They have grown the business heavily. They've grown their profits heavily. They've grown their revenues heavily, right? But they've shown me that they're willing to do an APO. In fact, they've shown me that they're willing to do an APO more than once. So
Earlier,
not to say that they won't do it again.
So earlier in this conversation, right, someone mentioned that it could very well be the case that once they've retired the debt with the proceeds, or so they could be coming back to the market. Like, what is stopping even Qantas from considering an APO themselves?
Nothing.
Exactly. So I mean, that is the case then, and we're talking about Cygnus showing that they can come to the market for an APO, and we've already discussed the dilutive effect of that.
Right? Also, I agree that Qantas could have so it's the same type of dividend. Then Qantas could very well come with a dividend on the same basis as Cygnus could come with as Qantas could come with an APO.
An APO, and bear in mind, Qantas doesn't have a history of an APO yet. Cygnus does.
So same issue dividend, same issue APO.
Yeah. But then it then comes to a question of, okay, then with all of that in mind, right, and they could be paying dividends and all that, right, that they begin paying dividends. Mm-hmm. What would dividend yield look like, considering
we worked out?
I mean, we can try to do some mental math around it.
We can.
You sound like you do it already. Let me hear.
Yeah, I agree. I was about to say it. My calculator don't percent, but it sounds like you have.
No, I haven't actually worked out any dividends. It's just that, for argument's sake, we know that their net income for the year for 2025 was around $2 billion or so US, right?
Who's they in this case? Qantas or Cygnus?
Yeah, Qantas. Uh-huh. This is in USD, right?
Mm-hmm.
I have I just right now just looking at even the prospectus and the numbers.
Mm-hmm.
Try to just do the numbers in the back of my head.
1.9 million. 1.9 million
USD. Is it? Yeah. Is it reporting in USD? No, okay then. So at that number, we talked about what that potential PE multiple would be, right? Now we talked about, you guys mentioned that you don't really like looking at the multiples because some people may not be paying attention to that also, and that's completely fine.
That's not what we're saying. That's not what we're saying. But continue. We look at the multiples, best believe.
Yeah. So if it is that we're looking at what the multiple is, and they're saying that the dividend policy is around 85% of distributable earnings, I just say that's okay, it's 85% of earnings. Mm-hmm. The mere fact that it trades, that it would become listing at a higher multiple, just going through the mechanics of it would suggest that the dividend yield would be lower just based on the formula just to calculate the dividend yield.
So they're coming at a higher PE. If they give 85% of that higher P or that higher E against the yield.
So the E is in the denominator, and we're saying that, okay, then the price relative to the earnings, and we're talking about the dividend payout ratio, and we can use that to come up with some idea of what the dividend yield could potentially look like at the current listing price. You would come to the conclusion that, okay, that dividend yield may not look as attractive as Cygnus.
If you're straight lining it that way, agreed.
Okay. Okay.
But you have to also straight line the growth.
That's the growth in earnings?
Yeah, the expected growth.
Okay.
You can't count them out.
I don't have much thoughts around what their earnings growth could look like. Right. I was just looking at it in retrospect, coming up with a pro forma number based on their performance for 2025. Right. And then looking at that relative to what Cygnus performance has been over the last 12 months. Right.
All right, but you've done a lot of snipping around the edges you don't like in order to look at the picture you want to see. But being fair, you can do the same thing. You keep comparing them. What Cygnus' growth within the first few years like compared to now?
Yeah. No, it's not me really raining on or trying to put down.
My brother,
at
I speak for Danhai and myself here. Like none of us are majority owners in any of these companies. We don't care. We don't care. You can speak freely.
Yeah. So at the start, I said that I wanted to play more so devil's advocate.
All right.
Right. I don't know if you remember when I said that earlier.
Yeah. You did.
Yeah. So like and of course, you know, I haven't gotten the chance to look through the prospectus in its entirety. Right. Maybe there's something there, but again, then I'm saying that it comes to the point where, okay, if we have two companies that to me are fairly similar and looking at some of these ratios that I'm looking at, again, you have other things that you can also look at, you know, because you can't be looking at a ratio in a vacuum that wouldn't make any sense, right? You have other things that you also need to pay attention to when it comes on to whether or not you should invest in a company, and it goes beyond even relative valuation, right? But just going off that, it begs the question of, is this really something that, you know, you would probably want to put your money in when, you know, there are other, I would say, more mature companies out there trading at a discount with the proven track record for dividend payments, right? Is that value proposition being offered here as strong as it may seem?
Why not? You could have made the same argument with Cygnus listed, right? And what have they shown us over the years? Massive top line growth, massive bottom line growth, consistent dividend payouts, right? This might be an opportunity. This might be an opportunity to get the next Cygnus.
That's definitely true. But
yeah, I bear this in mind. Bear this in mind. What if they don't do an APO? Suppose they don't do an APO for maybe 5 years. What does the first 5 years of no APO growth look like?
That would probably be very great considering how things were for Cygnus before its first APO.
Okay, but if I were to put my money in Cygnus, I would miss all of that growth because I'm looking backwards instead of forwards.
Yeah, that's definitely one way to look at it as well.
Yeah, so I know you put it together as a. Sorry, go ahead.
Yeah, it's just that in doing that, the way the price performs would also depend on sentiment around the company by investors in general, right?
Yeah, that's how prices perform. Yeah,
okay.
That's the price. That's price.
Okay, and for the average retail investor, I feel like, and of course this is anecdotal evidence, I have no numbers or studies to back it up, but for me, I realized that in the market, especially around, you know, IPOs and so, if the business model is not immediately apparent or understood, some investors do shy away from it, and I feel like that has been the case for even some of the more novel companies that we see listed, because of how I mean, beyond just Cygnus, you have other companies that offer some investment vehicles that operate within the alternative investment space. Another one being even PJX, although maybe that may not be the best example to use here.
Why not? Don't cherry pick your examples. If you put forward a situation and within the situation or the constraints of what you put forward, you have things that don't match it.
No, it's just that's the thing, that after saying PJX, I was saying that maybe PJX may not be the best example since they're more private equity than private credit, and I would consider
they're private credit also.
Yeah, but I mean, you would consider them closer towards private equity than private credit if we were looking at it from a spectrum. So maybe they may not be
No,
the.
I look at them as exactly how I look at Qantas, exactly how I look at Signos. They're the same. The only difference is Leachin has proven his metal over the decades, while Signos, the team is younger, coming up. They're proving, but they have proven some amount of metal also. Qantas, if you take the Qantas example, not their track records individually, is now about to prove its own thing. I want you to understand here. Don't take from this that I like Signos. I mean, I like Signos as a company. We've said that many times, and I like Qantas as a company, but I don't.
Buy it.
Yeah, I'm not buying it.
That's on the barometer.
Yeah. You notice what I said when you gave us that false choice? Why would I be, if I had the 500 grand, why would I be locked into either of these two? That's what I'd be thinking with my actual 500.
I will have to pick between two. There's no actual constraint there.
Yeah. No false choice. And yes, Signos is great for me. Signos is a very predictable vehicle. I like predictability in investing.
Yeah.
But part of that predictability, you don't want to agree so quickly, is that the share price is going to move down and to the right. And it has done that predictably for a long time. And it has very predictable times when it ticks up, like later this month and next month. But then after that, it's going to go right back to the norm, down. I remember we did that episode it would have been in COVID times, maybe 2021 thereabouts. It was when it was close to between 15 and 18 thereabouts dollars per share. And I remember I was saying it not going back to that anytime soon. That was 4 or 5 years ago. It's now today it's stronger than it was 5 years ago, much stronger, much bigger, and the share price is $10 per share, $10.25 per share. Am I impressed by Signos, the company? Yes. Best MD&A of any company on the market. Most useful MD&A. But MD&A don't pay my light bill. So if my $18 is now $10, and dividend, and the dividends do sometimes. So like I said, rest of this month, next month, sure, love April, May, June, next 2.5 months, love Signos. July, I'm off. I'm a wagonist when it comes to stocks. Most. I will pick a good home and I'll stay there. But outside of that home or those homes, a wagonist, I don't have to love any of these things. Because also, going back to my point earlier about, when a company separates itself too much from the share price, Signos is a great example of that. Those guys with a nice, massive safety wall between themselves and the share price, which in their shoes, I'd probably do the exact same thing. It's smart.
Sure.
Yeah, insulate yourself against the share price movement. You are in a business where you need predictability. You can't be at the whims of the share price movement. But I live a life that's at the whims of the share price movement. So I look out for people who insulate themselves against that, and I have to invest accordingly. So I wouldn't put my 500 grand in either of them because it's a false choice. But if I was forced to, I don't know. Qantas might be Signos at the start. Signos at the start gave us a great little dip and then a wonderful rise. And many lessons along the way. And many lessons since. So maybe you'd be missing that rise if you are only looking at Signos now. What if while these guys are growing, these guys being Qantas? I mean, Qantas's next set of results are going to be great. I suspect are going to be great. Maybe next year is going to be, I think they're going to be great right up until they're ready to do the APO, at which point they're going to be even greater. But APOs do what APOs do. So I'll be missing whatever growth in share price I could expect between now and APO. I'd be missing whatever dividends I could expect between now and APO. And I'd be getting whatever Signos is giving me during that time, which is good for what it is, but I 7% is cool, but if I was going for just that, I can buy any of the bonds. So one of the things I want to say is to don't lock yourself into that false choice because you're also making it for yourself. Yes, they're a lot like Cygnus, but so what? They're also like PJX, so you never compare them to PJX.
Yeah. Well, not only just PJX, you also have Epley as well. Epley investment.
Many. Yep.
Yeah.
Epley dividends are on. You can't mess with those dividends, and Epley is in, believe it or not, growth mode.
Yeah, that's also true. So yeah, I see your point.
MJE. MJE may not do the private credit, but
they're another example.
They are equity exposed. Maybe I wouldn't put them in quite the same boat, but they're equity exposed. They're at a low now that might be great, right? One of MJE's biggest stake is SVL at a wonderful low now. I don't think it's gonna stay though for very long, right? NCB does the same thing. Like there's so many of these options that I wonder why would you lock yourself into the false choice?
No, it was more so just an example, and 500,000 was really just a nominal figure.
I understood it, I understood it.
500,000 could be a very small amount.
Yeah, man, right? It's not around the number, man. I understood your point, and I appreciate your point. It's a great point. I want to tell you that, don't lock yourself to that sort of false choice, because you know what I know? With experience, I can tell you this. The pretend false choice, when you actually are investing, you tend to do it to yourself. Ask Danhai how often you hear this sort of thing from him people, his clients, where they come to him already deciding, yeah, man, this, and they're gonna pay him to tell them why they should make the decision that they've already made. That's a very difficult place to get somebody out of, Hey, I've already decided to jump off this bridge.
And you can see you can see how flexible they are to make themselves stay on that bridge.
Yeah.
A man will tell him goal, you tell him don't align, he shifts his risk elsewhere, and the moment so say this thing doesn't actually work out for the goal, but sometime outside of the goal period, outside of the return, whatever was given, and the thing does something, remorse immediately. Why never buy this thing that bingo 2 years after the actual time I wanted the money, after the time I told you I wanted this to actually work out? It's a prison you put yourself in.
Yeah, man.
You don't see the walls because you walked right into it.
Because you created them.
Froggy now, well, yeah.
Yeah, you created
it. So.
Yeah. Because that Cygnus Qantas example, we're going to hear a lot more of it over the years.
Mm-hmm.
They're very, very similar companies, which can be good or bad. I see Andy B jump back on. Yeah, Andy B.
Yeah, I just wanted to jump back in to really ask a few things, because I've picked it up, is that oftentimes when we're investing, you have to understand what are the objectives you're trying, what's the objective of this investment? Because Pav had mentioned earlier in that you can find multiple different vehicles to do different things. Does this achieve what you want to achieve? And if you're not willing to do the work to do the deep dive in doing the analysis, then it may not make sense for you to consider it, because you don't have that conviction to stand behind it. It may be a good idea, but do you have the conviction to stand behind it when things aren't going a particular way?
Major, which is why you notice why I asked you, Andy B, was like I was just carrying you down the road of Cygnus. It takes a different level of psychological understanding, or just honestly, just understanding where it is that you're going and what you wanted, to look at the 20% drop and go, oh, it's actually a 20% discount. And then that 20% discount becomes next year's high. So, you're looking at another 40% discount. It takes a different level of understanding and guts to go, no, the thesis hasn't changed. The vehicle is still strong for where I am going. So if I'm building my child's pension, yeah, well, 20 years from now, when Bank of America or Bain Capital comes in and buys up Qantas for 20 US per share, my child will be very happy that I made this now. But I'll either be old or dead, so I won't have seen it. But before you get to that 20-year mark, you are putting money in something and you have to be going, no, listen, the company is still good. The leadership is still good. The dividends are even better. I'm getting 15, 20% dividends. I wouldn't get that anywhere else. Yes, I'm down 30% still on the share price. And even if, and I have so many shares that I cannot sell. I literally can't sell, but that's okay because I'm not looking to actually sell. It's a different thing that most people don't consider at all. Rich or poor, finance or non-finance, most people don't consider it at all. It's the biggest thing that most people struggle with. And that's why you're as excited. That's why you said Danhai is excited too, because when you're talking about it, Andy B, you're saying things that like nobody's prompting you to say it. You're saying things. I didn't agree with all of them, but you're saying the things that somebody who is truly on that road is oftentimes that I'd love to hear, but you don't usually hear it. I usually just hear people say, I'm long term. Let me tell you something.
Stop right there.
Most people who are long term aren't long term. Right?
Money is not where the mouth is.
Yeah, man. The first 20% drop,
They
they're
are
not
two
long
breakers
term.
away from me, not long term.
Yeah, man. Yeah, you know how much long term people bought woodcats? 1 month later, how much of them sell? I mean, some of them sell because you know who's buying now. I'm long term. And I'm not buying because I'm not long term either. I'm long term, and who knows? Maybe it's a great opportunity, but the opportunity is what it is, but you have to see it as the opportunity, because to everybody else, it look like the price is falling. So, and being able to see that ahead of time, like being able to see Qantas, maybe Qantas is gonna look like Cygnus in 2 years. I see Yannick say on Twitter, Yannick3616 say, after they get the Cygnus haircut, I will consider. But I'll counter to that. Who says they're gonna get that haircut?
Yeah, exactly.
Yeah. Suppose they just don't do it. Suppose they're smarter than that. Suppose what they do in year 3 is that they list Qantas. What they call it? What not a management company? That the Jamaican arm is called something else. Suppose they list Qantas Capital, or Qantas itself has 2 things that they put money into, and they allow those one of those 2 things list, and like the APO is not the only way, and it is, in my view, quite frankly, it's lazy. So these guys have sharp minds. Who knows? They might be going, hey, let's not do the APO route. The first company to be in this space, have an APO opportunity and do something other than an APO, something other than dilute the shareholders, that company is gonna get very, very. That company's shareholders are gonna get very, very rich. Very, very. I won't say very, very quickly, but they'll get very, very rich, in my opinion. So who says you're gonna do it? Suppose man them don't do it. Also, it's not a lot of shares. Suppose in year 2, the man them do a stock split. Suppose they do a rights issue. You guys, suppose Qantas does it. Imagine that, Danhai. Qantas doing a rights issue at, I don't know, IPO is $19. Wasn't do a $10 rights issue, or a $5 rights issue. 1 billion shares, $5 each, rights issue.
Money.
Whew. I have to find back mastermind and ask him why him tell me somebody to put the money in a Cygnus instead. Yeah.
What was the last part?
Yeah, you better not hear. Yeah, my point is that, we need to match what we really want to what's within the lines of what's out there, because the money rarely ever walks straight, right? And nowadays on the market, a good IPO is not what we think it is. It's not day 1, 2, 3. Those days are gone. Unless you have somebody out there who is, I won't say they're gone forever, but yeah, Woodcats I think was a good IPO. It's below IPO price now. 1 month later, if you're long term for 1 month, you're not very happy right now. Yeah, you want to look at it a bit differently. So I don't want us to go all night. I don't know if anybody have anything else they want to say, but I want capital around that, like a good IPO. And I'll cap it with some of the points that we made. Danhai, tell me if I get in all the points I hit here. One, you mentioned the pricing. And I'll add on that and say pricing have 2 arms to it. There's a nominal pricing, like the $1 IPO. There's the what we often mean when we hear, I'm saying Danhai and I, when you hear us say if something is priced well, it don't necessarily mean the $1 or whatever. It means PE is a good example. Is it priced well in that it's at a good PE? Is it valued well? And also have that nominal price that people like or can appreciate, right? And there's many ways to that. Like I don't feel bad say I think Qantas is priced well. I think it is priced well, even with its $17 nominal price. I think the $17 nominal price is a good part of it being priced well. Like, bro, we're not trying to grab all and sundry. The price is the price. Sorry, I said 17, 19. The price is the price. You meet us or you don't meet us. It's quote unquote not a retail offer. They didn't say that. That's me saying that. Some points that you guys made. I don't know if it was said on YouTube, but I'll say it's something I'm thinking to. It's good when the thing is known, right? Like Danhai said it earlier. KFC can come to the market at $8 and can come to the market at KFC can come to the market at any price. It's KFC.
People go find a way to make that sound good.
Exactly. Yeah. And
see a man are gonna say, boy, that's too expensive tomorrow.
Yeah. KFC can borrow 10 billion.
KFC we are talking about in the brother, right?
Exactly. KFC can come to the market, can borrow 10 billion and come to the market and put in a prospectus. We are listing to pay debt. And everybody's gonna forget that them don't like that.
Plus pay out a big dividend before while listing to pay debt.
Yeah, man.
I'm selling shareholder.
That's something on the side.
Triple combo.
I think it's good when there's, as I said, the pricing, something that's known works well, but how known you are is how known you are. So if you're not well known, you want let me not try to give it too much. That is that. 3, well, this is linked to 2, so maybe 2B, the known. Don't overcomplicate the thing. If only analysts understand your business, then only analysts would buy it, and most analysts don't buy. 4, 4, you need people with deep pockets to care about the thing longer. I think that was said by Tryon on YouTube. He said IPOs need interested parties that will purchase large amount of shares for higher than the IPO price consistently post IPO. Yeah, you need those people with money to come in. 5, I want to say dividends, but the truth is we don't know. Every one of them is going to tell you that they intend to pursue, and they'll also tell you that they are under no obligation to, just like Qantas. That I would be very surprised. I expect Qantas to pay dividends post IPO. I don't expect them to pay dividends at the level that they have paid it in the past. I expect them to actually be good dividend payers. I don't expect that will matter to most people.
Qantas. Prove it,
Qantas. Say that again?
Do it. I'm telling them to put. I'm putting it out there. They should prove you wrong. I would
Yeah,
love to
man.
see it.
Yeah, man. Yeah, you remember that guy on Twitter said you weren't gonna do it? 150%. And you know, if you want also the distribution of the shares to not be too wide, that's just a simple truth. Supply and demand. If the supply is too huge, the demand is low. So you want that sort of thing. Yeah, don't overcomplicate it. And if it's really complicated, the more complicated the company is, the closer the price needs to be to $1.
Randy.
Yes, Tav.
Why? I don't know if you did mention the I part still, you know, but I play a big part in the IPO. The IPO, if it's a good IPO.
That's actually maybe a good ending point. But here's the thing. Which companies can manage their hype? Meaning every single company comes to market and them want to create a hype, but can they? Look how hype people were about Kadim and Dollar. Kadim come back with Equity. Where was the hype? Same Kadim. Own piece of Dollar, have so many other companies. Where was the hype? Yeah, like who has that? You either have the hype already or you don't. KFC already have that hype. They just need to show up. But yeah, if you don't have it, how are you going to get it?
Maybe the hype wasn't just Kadim.
That's it.
Or maybe the hype is not what you want. Meaning you might want the hype, but you can't bank on that because you literally don't know how to get it. If you don't have it already, you can't get it within the 2-week IPO period. Yeah, we've seen so many efforts. Look on Wigton, look on Trans-Jamaica, both from the government. Trans-Jamaica's hype followed Wigton's hype. Yet Wigton gave us stellar growth, continuous stellar growth, and still has. Trans-Jamaica meandered for years. Trans-Jamaica hype just reached year before last till now. But Trans-Jamaica has been listed since 2020. So where's the hype? So I take your point that hype is a good ingredient, but you can't, if you don't have it, you just don't have it. But you don't want to rely on it, in my view.
Yeah, and more than likely it can be the hype alone. Or something else that to create the hype too. Because you know, other people are gonna look on it and they're gonna probably get hype over the other part of the offer itself. So
yeah.
the offer are gonna build up the hype. So more than likely, yeah, you're right.
You think the offer will build the hype?
I think so, because a lot of people who invest in a stocks invest because their friends talk good about it or other people are talk good about it. So I figure more or less if the offer is is good to people who actively invest, they are going to talk to other people about it and they are going to talk a lot about it and it's going to make other people care about it. And that's basically going to build up the hype. Or that means thing. Because when Trans-Jamaica, all different type of people when I invest, all of a sudden everybody want to buy Trans-Jamaica. You know, just because of the hype where I build up around it, other people are talking about it. Yo, man, if you put money in a Trans-Jamaica, one name so. Brother, you put your money in that, your money I got triple.
Not at IPO though.
Nope.
Not at IPO.
No, not at IPO. Not at IPO.
We're talking about IPOs. Yeah, at IPO it wasn't quite.
Yeah, you're right.
The government spent a
a
lot of money and a lot of ads.
I mean, I think the hype was there in the IPO. That's why them could have raised so much money. You don't think so?
No, I think.
But it's after.
I think actually.
After there was no hype.
I think they benefited a lot. I think Trans-Jamaica benefited Wigton's hype. I think there was questions around if necessary, but by the time Trans-Jamaica was out, Wigton at one point when Trans-Jamaica was either near or out, Wigton had doubled. You remember it hit $1 before during the year. Yeah, it's not. Yeah, I think that. Yeah, I'm biased in that, but I wouldn't depend on the hype. You either have it or you don't have it, but you don't need it. You need the money at IPO. I think you need the deep pockets. Some of the easy deep pockets. You need the pensions on your side. That's the truth. You need the pensions or the brokers or both. If you don't have them, retail is not going to save you. That's the truth. Micro market might change that, but right now, retail not saving a soul. The retail is filled with medium-sized sharp funds, people like Tav, who say I pay out dividend to himself. People like hopefully me, people like you guys listen to this. Retail people who are long-term, but them sell the first chance they get. And the truth is that they're all looking to sell quickly. So you can't really bank on them for your offer to be filled because of another thing, which is that the IPO is not really for you to make profit. It's for the company to get money. So if you to be successful, you can't just bank on the hype. You need the funds. You need and most of the funds tend to be patient capital, the pensions and so on. So again, the equity is a good example of what happens when you don't have them on your side. No matter how much people like the thing, if you don't have one or two pensions coming in to throw some heavy money or two funds coming in, it is what it is. So I wanted the conversation to be more than just Qantas, but it obviously would still touch Qantas, and I'm happy that it has. And the other thing is, yeah, if you set yourself up right, look at this small. Like I want to say it's a small offer, but 2.5 billion isn't small, right? But look on the prior owners and look on the offer itself, and talk to your advisor. See if you can link up with Danhai before the offer open. thehalladvisor.com. You all learn how this thing go. everymickle.com/GRWR. And if you want to keep track of the market, mymoneyja.com. You can't miss with that trifecta. Yeah. When I say thank you guys, I don't want us to go all night. We're at 11 o'clock, 11:04. Anybody have any last words they want to throw in before we go? And thank you, of course, to the people who joined. A bunch of you joined. Everybody who joined and spoke, I did promise you a My Money JA discount. Please DM me, and I'll sort it out over the weekend. And thank you, of course, again to everybody joining. Lopo, Tav still on. Of course, always thank you to Danhai for joining with us. Danhai, you want to tell the people about Good IPO? What them say they must buy, spend throw the whole 500,000 in a Qantas.
No, that would require a session where we speak about your goals and if the money should go into this IPO. As we said to, what's his name? Maestro.
I don't see the name in there, but yeah, but I know who you're talking. The guy who was just talking.
As I said to him, it's not there's no prison here. It's not, boy, this IPO or this stock. You have a lot of options on the market, and make sure your money aligned with what you want for your money aligns with that. Don't make it be, oh, I need to invest in these two stocks, So tell me which one. Figure what you actually want for your money, and then we'll work it. And we'll work what actually needs to happen for your money after that.
Yep. So
and as we've said many times before this, somehow we never said it tonight. You don't need to wait on an IPO to find a good investment. There are opportunities all the time. Money is being made all the time. There's something that fits your goal all the time. You don't need an IPO to come to suddenly start investing. It's almost always better to be investing before the IPO comes around.
Yeah. Ask everybody on the reserve list for Qantas.
Exactly that.
Yeah, it really is. So please, I hope you guys enjoyed. People who, if you decide you want to join the Grow subscribers group, if you join between now and tomorrow afternoon, you'll get access to the chill session tomorrow. The Grow subscribers have a good session with them tomorrow. It'll be more permissive. I can speak more freely and go in depth. I'm sure we're gonna go very deep on this QA offer and of course everything else, and also some signals. And so we're going into signal season now. So yeah, thank you guys, and it's been on our BrickTalk. Have a great night, guys.
People, bless up. Enjoy the weekend.